Okay, friends, see, now we are going to discuss about gifts. Gift. What is the meaning of gift? Gift means gift, sir. Good, very good. Actually, since last 2-3 days, I am enjoying after the break, lunch break. Why? Because you all are behaving as if you are just now returning from mental hospitals. The type of answers which I usually get from you after the lunch break, are very interesting answers. I asked a question, what is gift? Gift. Today, see, I'll just tell you an incident before the break. What happened? Bhumika has not come. Bhumika has not come today, okay, no? So, actually, I have to ask her friends that where she is, why she has not come. So, but naturally, the person sitting besides Bhumika is Wafa. Okay. So I asked her, why Bhumika has not come? So she has not come. That is the reason, no, why I asked. Where she is, why she has not come? Sir, she has not come. If I am telling you to write an essay on mango, huh? You don't know anything about mango because you have learned mango tree. So you will write everything about mango tree, huh? Oh ma. So let's continue. What is gift? Gift means gift. Good. See, the provisions of gift are under section 56, subsection 2, clause 10. Guys, please keep quiet now. Done. 56, subsection 2, clause 10. Okay. See, out of the clauses, how many clauses we have covered? Have we covered clause number 1? Dividend, winnings, amount deducted from employee's salary, interest on securities, rent from letting out, plant, machinery, furniture. This composite rent also we have covered. Then we have covered amount received under keyman insurance policy, and along with this amount we have also covered clause number 12. Any sum received under a life insurance policy which is not exempt under section 1010D. That also we have covered. We have also covered clause number 8. Interest on compensation or enhanced compensation. And then we have covered clause number 9. Advance money received and forfeited in the course of negotiations for transfer of a capital asset, but the negotiations did not result into actual transfer. Okay. And now we are covering gift. Now see, gift under the Income Tax Act. Okay. Earlier, no, long time back. I'm talking about long time back. There was a law in India. The name of that law was Gift Tax. Gift Tax Act was there. I'm talking about those days when you were not there on this earth. Okay, many of you was not born only. Even I was a very young kid at that time. Long back, there was a law. What was the name of that law? Gift Tax Act. According to that Gift Tax Act, what used to happen? If a person who is there, who is gifting some asset, cash, assets, yes or no? So the donor, the person giving the gift, used to be known as donor. He was liable to pay tax on gift. So government used to charge tax on gifts also, long time back. But that to charge tax on gifts, there was a separate law, and that law was Gift Tax Act. The gifts were not taxable under the Income Tax Act. There was a separate law for chargeability of gifts. So then what happened after, long back in 90s, 98 or something like that, the entire Gift Tax Act abolished. Government said that no, we don't want to charge any gift tax anymore. Why? Because the collection is not too much. The levy of the gift tax, meaning the gift tax, yes or no, that gift tax is not collected in a quantity, in an amount which the government wants to collect. And many of the transactions of gift are not reported also to the government. So hence the government is not liable to, not able to collect that much amount of tax, and keeping a separate department for collecting the gift tax, running that entire department, paying the salaries to that officers working in the gift tax department is very, costly for the government, because the collection of the gift tax is very low. And people are not paying taxes on the gift, and why to charge bloody tax on the gifts? Okay, because someone is giving out of love and affection something to some known people or relative. So out of love and affection, if someone is giving, then why to charge tax? We are abolishing gift tax. So gift tax was abolished. Law was repealed. But the government did not, anticipate the repercussions which it will bring. Now earlier what used to happen, the person who is giving gift, he had to pay tax on the gift tax, under the Gift Tax Act. So now that person is not liable to pay any tax. So if I will give you gift, will I be liable to pay any gift tax? No. And for the person who is receiving that gift, for that person it was a capital receipt. It was not an income. So not liable for income tax also. So neither it is taxable for the person giving, donor, and nor it was taxable for the recipient. Now what people started doing, if there is a raid in my premises, income tax raid in my premises, they came to know that I have earned so much of income, and I have not reported that income to the income tax department. So they raided my premises. In my premises, they came to know so much of the investments, so many, jewelry was found, so much of the cash was found. Okay. Then they started asking me, sir, from where this cash, you might have earned this cash from as your income, and you have hidden this cash inside your house. So during the raid proceedings, we came to know that you are having so much of the cash, so much of the jewelry. To buy this jewelry also, you might have earned income from somewhere, no? So from where you got all these things? From some income only, this cash was accumulated. From some income only, this investments were made. These jewelry, etc. would have bought. I said, no. This was a gift for me. Big businessman, during the year, sometimes it is my anniversary, sometimes it is my birthday, sometimes it is this, function, that function. I keep on doing different parties, and many people I call, some people are coming and giving me gift. I will not deny. It's a kind of well wishes, good wishes from my relatives, my known people who are coming and attending those functions. So they have given gifts. All these are gifts for me. So I used to call all these things as, and by the way, gifts were not treated as income. So during the raid proceedings, even if something was caught, some hidden income was caught, yes or no, I used to report them as what? Gifts. And accordingly, if it is a gift, not liable for income tax, because it was a capital receipt, not any income under the Income Tax Act. So it was not taxable. And people started taking their taxable incomes also in the form of gift. Say for example, I want to receive 5 lakh rupees of income from Akshaya. I will tell Akshaya that, Akshaya, don't pay me that 5 lakh rupees as what? Income. Rather, pay me that amount as gift. Akshaya will say, sir, why would I do that? Akshaya, no need to worry, no, because now there is no gift tax. So the person giving me the gift is not liable to pay any gift tax. And for me also it will be a capital receipt. Okay, no. Anyways, I have given some goods or some services to you. I have sold some goods or services to you. For that you are going to pay me 5 lakh rupees as my income. Why are you giving me that as an income? Rather give that amount as gift. For you also the gift tax will not be applicable, and for me also it will be a capital receipt, will not be liable for tax. So people started taking their incomes on the name of gifts. So that time, after 4, 5 years, 6 years, the government realized that abolishing the Gift Tax Act was a very bad move by the government at that time. But now that same law could not be again, revived, because the law was abolished. Now even if the government will revive that law, what the people of the country will think? That the government does not want to run does not know that how to run the country. Sometimes bloody it says that this law is not a good law. They are talking bad about the law and they are, repealing the law. And again after some time the government says, no, we want to again charge tax on the gifts. So public confidence will not be there on the government. Okay. So we cannot again revive the Gift Tax Act. So what to be done, what to be done, what to be done? That time, for the first time, the gift provisions came into existence in the Income Tax Act. Now the Gift Tax Act cannot be revived. See, we cannot stop the people giving the gift. Earlier we were stopping them because of what? Gift tax. If the gift tax would have been applicable, Akshaya would not have given me that amount as what? Gift. Because it would have attracted gift tax in her hands. She would not have given. Yes or no? But since Gift Tax Act was not applicable, she was comfortably giving me that amount as gift only. So, reviving the gift tax is not a good idea, but we cannot, we have to do something to address this issue. So that time, for the first time, gift provisions came in the Income Tax Act under the IFOS head. So earlier, the gift provisions were there in clause number 5, clause number 6, clause number 7 and all. All those clauses are no more in existence because all those clauses are now clubbed into one clause. Clause number 10. Understanding? So earlier, what they did, okay, the person who is giving the gift will no more be liable to pay gift tax. But the person who is receiving that gift might be receiving that amount as his income. And he is trying to hide that amount behind the curtain of gift. Yes or no? So why not to charge tax on the person who is receiving that amount as a gift? So first time under the Income Tax Act, in the definition of income, in the definition of gift was introduced as income. Any sum of money received without consideration is a gift. It will also be treated as your income. And that income will be taxable under the head IFOS. Earlier there was a limit of 25,000. That up to 25,000 if the gift is received, then it will not be taxable. If the amount of gift is more than 25,000, then it will be taxable. Then later they revived that limit of 25,000 to 50,000. Then later on they amended that single gift of 50, no, aggregate amount of gift of 50. Then people started taking their gifts in the form of kind. So they amended the gift provisions. Not just the sum of money, but the gifts in kind, in the form of assets, immobile property, specified movable assets. They will also be treated as what? Gift. Then later on, people started to avoid those provisions also. Then what they told, that not just the amount or the asset received without consideration. For some consideration also you have got those things. Then also they will be treated as what? Gift. Earlier the gifts were taxable only in the hands of individuals and HUFs. Then later on they started taxing those amounts. Later on they started taxing those amounts in the hands of perfect. How much is the cost per one? Perfect. Okay. Then they later on told that now the gift will not be taxable only if it is received by individual or HUF. Because why? What happened? See, earlier when it was taxable in the hands of individuals and HUFs, so if you give that gift to me, I am an individual receiving the gift. It was taxable for me as my income. To avoid that thing, what people started doing? I formed one partnership firm with my wife. So me and my wife, we both are 50-50% partners of the firm. To whom the firm belongs? To me only. So don't give that gift to me, give that gift to partnership firm. Why? Because any gift received by an individual will be taxable, but any gift received by any other person will not be taxable. So likewise, the gift provisions had, they were changed many times, and right now the gift provisions are finally settled. So all those cases which were under different clauses, are all merged to a single clause. Clause number 10. Now there are total 5 cases. How many cases? Now see, in these 5 cases, what will happen? If any person is there, any person, he is giving gift to any person. So can I say the person giving will be the payer and the person who is receiving will be the payee? What this person is giving? This person is giving sum of money, and that sum of money is given without consideration. I'm just giving you sum of money without any consideration in return. Are you doing anything for me? No, without any consideration I'm giving you sum of money. That is a pure form of gift. But to avoid this thing, people started taking the gifts of assets and not money. So to cover those things also, what they have done, not just sum of money, but any immovable property or any specified movable assets. Not just immobile property, but any all movable, only specified movable assets. And which movable assets are specified? Do you remember? P for, J for, D for, A for artwork, A for archaeological collections, S for sculptures, and S for usually these immobile properties and these specified movable assets are what? Capital asset in the hands of the recipient. So the person who is receiving that is receiving that as what? Capital asset. So only those assets which can be treated as what? Capital asset in the hands of the recipient. Their gift will be covered here under the head IFOS. Now, if you receive immobile property, you can receive immobile property what? Without consideration. Tell me yes or no. Can you receive specified movable asset without consideration? So earlier they had covered all the cases where sum of money received without consideration, then immobile property received without consideration, specified movable asset received without consideration. Without you doing anything, I'm giving you sum of money. Without you doing anything in return, I'm giving you immobile property, or I'm giving you what? Specified movable asset. Then it is a gift, purest form of gift. Gift in cash, gift in kind. But to avoid this thing, that the gift provisions does not apply, people started applying their mind. See, for example, if I'm giving this asset to you for 5, the value of this asset is 5 lakhs. Okay. So I'm giving you a gift of how much? 5 lakh. I want to give you an income of 5 lakhs. Okay. So that 5 lakh rupees income, if I give you in the form of cash gift, then it is taxable for you. If I give that 5 lakh rupees of income in the form of some asset, then also that will be taxable. It will be a gift. Now you want to have an income of 5 lakh from me, but you don't want it to be your gift also. Then what you did, you said, sir, don't give me this asset, give me this asset. What is the value of this asset? I will say 7 lakh rupees. Do one thing, sir, give me this 7 lakh rupees of asset and I will pay you 2 lakh rupees. You are supposed to get that 5 lakh rupees from me. You got that 5 lakh rupees from me. But now it is not treated as your gift because I have not given you without consideration. For that, I have received a consideration of 2 lakhs. So now you will say that I have not received without consideration, not my gift. But bloody, have you received it for a consideration which was inadequate? Even that should be treated as your gift, because you have started taking your gifts in this manner. So, two more cases later on got introduced. And immobile property without consideration, or for what? Even inadequate consideration, even will be treated as your gift now. Specified movable asset, which you are receiving without consideration, that is your gift. But even if you receive any specified movable asset for inadequate consideration, that will also be treated as your gift. How many cases? 5 cases. Sum of money you receive without consideration. Immobile property you receive, or immobile property you receive for specified movable asset, PJ Das, you receive without consideration, or those specified movable asset, PJ Das, you receive for. All these cases are covered under the provisions of gift. So the person who is receiving, are you an individual? Taxable for you. Are you HUF? Taxable for you. Are you company? Taxable. If you are any person receiving these types of payments, or these type of benefits, or these type of assets, in these cases, it will be treated as your gift under the provisions of Income Tax Act. Yes or no? So now tell me, first case I will tell you. Which case? First case. What is the first case? Tell me. So if sum of money is received, sum of money received during the previous year without consideration, will you receive it once, or you can receive it again and again? It is not necessary, no, that during the year you will receive only sum of money once. From multiple places, again and again, you can receive the sum of money without consideration. So whatever sum of money you have received during the previous year without consideration, you are supposed to do the aggregate. This is what? M which has fallen down. Summation. Mathematical sign. Total. So total of that sum of money. So all the sum of money which you have received during the previous year. For what? Without consideration. Aggregate of that sum of money. If that aggregate amount is more than 50,000, then that entire aggregate amount will be treated as your taxable income under the head income from other sources. First of all, we will consider this as your gift. This will be treated as your gift, and it will be taxable under the head IFRS. For example, during the previous year, one of my friend gave me 30,000 rupees cash gift. Sum of money means what? First of all, tell me, sum of money means what? Money. And money can be given in cash also. Money can be given through bank transfers also. Money can be given through online transfers also. Yes or no? Sir, somebody has done GPay. That is a gift. Sum of money. What is GPay? Google Pay? Yes or no? Somebody has given me some money through RTGS, NEFT, bank transfer, check, bank draft. What he is giving me? Is he giving me sum of money? So that sum of money can come in any form, no? Money can come in the form of currency. Money can come in the form of bank transfers. Money can come in the form of online transfers. Yes or no? RTGS, NEFT, whatever form. In whatever form the money comes. Is that money coming to you without consideration? Yes. So that will be your sum of money. Money can come in foreign currency. Money can come in Indian currency. But sum of money coming in foreign currency. So you'll have to first convert it into Indian currency by applying the rate. Which rate you are going to apply? The rate of exchange applicable as on that day. As on the date of gift. What was the rate of exchange? Apply that rate of exchange. Convert that foreign currency sum of money into Indian currency. So all those sum of monies you are supposed to consider. Yes or no? Sum of money received in India. You will consider that also. Sum of money received. You will consider that also. If you are ROR. If you are RNOR or NR, then will you consider the sum of money received outside India? Yes. If you are receiving it from any resident, because in that case it will be deemed to accrue or arise in India, if you remember. So whatever sum of money you are receiving in India, take that. Take that in the aggregate. Yes or no? Whatever sum of money you are receiving outside India, even that you have to take in this aggregate if you are ROR. But if any sum of money you are receiving outside India, you have to take that sum of money also in this aggregate if you are RNOR or NR. Even if it is received outside India, you have to take that in this aggregate provided you are receiving it from any resident outside India. So even if your status is RNOR, even if your status is NR, even if the sum of money is received outside India, but since you have received that outside India from any resident, it will be deemed to accrue or arise in India, will become your Indian income. Even that will be counted as a part of this aggregate. Getting my point? Now during the previous year you have to see how many times you have received. You have received it multiple times from different places. So all those sum of money you are supposed to aggregate. So during this full year, how much sum of money in aggregate you are getting from all the persons? Yes or no? That aggregate amount should be more than 50,000. Should be more than. Then that entire aggregate amount will be treated as your gift and will be taxable under the head IFS. So for example, during this previous year, you are getting only once. One of your friend given you 30,000 rupees. 30,000 rupees of what? Cash gift. Okay. On your birthday, your friend gave you 30,000 rupees. Okay. This is the only sum of money you have received during the previous year. Then what is the aggregate amount? 30,000. Is it more than 50? Nothing will be taxable. But during the year, one more friend gave you a gift of 25,000. So how much first friend gave? Is it more than 50? How much second friend gave? Is it more than 50? But aggregate amount is? You have to aggregate. Understand? So how much is the aggregate? Is it more than 50? Will it be taxable? How much amount? 5,000 or 55,000? Entire aggregate amount. What did I say? Entire aggregate amount. Meaning entire 55,000, which is more than 50. Entire 55,000 will be taxable. Gift in excess of 50 is not taxable. Entire gift is treated as your income and will be taxable. What if the aggregate amount was only 50? Then it is not your income only, not taxable only. What if the aggregate amount is less than 50? Then that aggregate amount is not your income, not taxable. But if the aggregate amount is more than 50, then that entire aggregate amount will be treated as your income and will be taxable. Excess will be taxable or entire amount will be taxable. Be very careful here. Okay, no? So now, first case is done. Sum of money received during the without. So aggregate sum of money is more than 50,000. Then that entire aggregate amount will be treated as your gift, taxable under the head IFS. Second case, sir, second case. You are receiving specified movable asset. Which asset? Which are the specified movable assets? PJ Das. Which can be treated as your capital asset. Other movable assets are not capital assets only. Yes or no? So I'm talking about those movable assets which can be treated as a capital asset in your hand. Because for the recipient, the asset coming should be capital asset. Yes or no? And what is the logic for that? I am also going to tell you. But tell me, are these movable assets capital asset? If you will receive them, can you receive them as your capital asset? Yes. So now specified movable asset, what are you going to do? You are receiving them during the previous year. Are you receiving them for a consideration or without consideration? Without consideration. So now you have to check what was the value of that asset. Which value? Fair market value as on the date of receipt. So as on the date on which you are receiving that asset, what was the fair market value as on the date of gift? Yes or no? So are you going to check the fair market value? Yes or no? Fair market value of one asset or all the assets? Because it is not necessary that during the year you will get only one asset. During the year you might get multiple specified movable assets. So fair market value of all those assets, aggregate of that. Yes or no? So you are supposed to take the aggregate fair market value of all those assets which are received during the year without consideration. If that aggregate fair market value is also more than what? 50,000. Getting my point? Then this entire aggregate fair market value will be treated as your gift and will be taxable income. Will be taxable income under the head PGBP, no? IFOS 56 to 10. So it is a gift under section 56 to 10. This was also a gift under section 56 to 10. Understanding? Now tell me, which are the specified movable assets? Guys? PJ Das, no? So during this year, one of your friends gave you jewelry. The value of that jewelry was 48,000. And that was the only specified movable asset which you have received during this year. Did you receive any other specified movable asset? No. Only one asset. And the value of that asset was? Is the value more than 50,000? Nothing will be taxable. But what if the value of that jewelry was 80,000? That is the only asset which you have received. Then is the value more than 50? Entirety will be taxable. But what if first friend gave you jewelry, value of that jewelry was 30, second friend gave you shares, value of the shares was 20,000. Nobody is giving you for more than 50. 30 is not more than 50. 20 is not more than. Are you supposed to see individual or aggregate? So during the year, how much is the aggregate amount of fair market value of those assets which you have received without consideration? Is it more than 50? Nothing will be taxable. One friend gave you jewelry of 30, second friend gave you shares of 20,100. So how much is the aggregate amount? 50,100. Is it more than 50? Entire 50,100 will be taxable as your gift as per 56 to 10 under the head IFOS. Will you remember this? Sure, sir. Now let me put you in some trouble. You have two friends. Okay. First friend is giving you cash. First friend is giving you cash, 40,000. Second friend giving you jewelry, 40,000. 40 plus 40, more than taxable or not taxable? Not taxable. Aggregate sum of money, not more than 50.
Aggregate fair market value not more than 50. That 50-50 limit has to be applied separately. Don't mix the asset as well as sum of money and take the aggregate 50. Yes or no? Separate 50,000 limit for aggregate sum of money. Separate 50,000 limit for aggregate fair market value. And if you will mix them, the answer will be wrong. So 40,000 cash. Taxable, not taxable. Because aggregate is less than 50. 40,000 jewelry. Taxable, not taxable. Because aggregate is less than 50. Aggregate fair market value less than 50. Aggregate sum of money less than 50. 50-50 limits are separate. Don't mix them. Getting my point? So in 5 cases, 5 times the limits are given. Those 5 limits are separately to be checked. Getting my point? Hello, sir. Now, can you get specified movable asset with consideration? But the consideration was, how will you come to know that the consideration was inadequate? Sir, the market value was more and the consideration paid was less. Hence, the consideration was inadequate. Yes or no? So, can I say now in the third case, specified movable assets. Which are those assets? Yes or no? Received during the previous year for, without consideration, no? For inadequate consideration. How did you come to know that it is inadequate consideration? Because the consideration paid to get that asset is less than fair market value. Yes or no? So you'll have to check that for which asset the consideration is less as compared to the fair market value. So how much is the fair market value? Example, the fair market value is 80,000. You received jewelry during the year. So the fair market value of the jewelry was 80,000. Did you receive without consideration? No, you paid a consideration of 55,000. So 80,000 worth of jewelry you are getting for how much? There is a benefit. How much? Even that benefit will be your gift. But that benefit cannot be taken as your gift until and unless the aggregate of all those difference is more than 50. Aggregate of all those difference is more than 50. So now you will have to check that during the previous year, how many specified movable assets you have received for inadequate consideration. You have to take the difference. Difference between what? So for every specified movable asset which you have received during the previous year for inadequate consideration, you have to calculate what? Difference. Difference between fair market value and consideration for each such asset. And the difference which you have calculated for each such asset, you have to do the aggregate of all those differences. What are you going to do? Aggregate of all such differences. Yes or no? If that aggregate difference, if that between the fair market value and consideration is more than 50,000. Yes or no? Then that entire aggregate difference will be treated as your gift. Under section 56(2)(10) and will be taxable as your income under the head capital gain. Oh, sorry, IFOS. Understanding or not? Now I'll give you few examples. Okay, no? See, this is your previous year. What are you throwing? This is the previous year 25, 26. Okay? I'll write it here only. Previous year 25, 26. Okay? In this previous year, you are getting following things. Okay? You got sum of money. Sum of money from X. Then you got sum of money from Y. Then you got jewelry from A, and A gave you without consideration. Jewelry from B. B gave you jewelry for a consideration of, sorry, B gave you jewelry for inadequate consideration. Inadequate consideration. Then you got some shares also. Shares you got from one of your friends, P, and then Q. Okay. Shares from P was inadequate consideration. Then shares from Q you received without consideration. Okay. Then you received some paintings. Paintings without consideration. Done, sir. And then you received some artworks. Artworks for inadequate consideration. Done, sir. Now these assets, sum of money you have received during the previous year. Done, sir. Now for each asset, the value. Value means fair market value. Yes or no? Value means, and in the case of sum of money, it is the value of that sum of money. Yes or no? Value. And what was the consideration? What was the? Okay. And you have to take the difference. Difference will be calculated only in those cases where inadequate consideration is there. Now, sum of money received from X was 40,000 and from Y it was 80,000. Dash, 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 dash. Okay. Now, jewelry from A without consideration, the value of that jewelry was 10,000 without consideration. So no need to check the difference. Understanding? Then B, from B you are getting a jewelry of 95,000. How much? 95,000 for 45,000 only. So what was the difference? Okay. Shares you received for inadequate consideration. Shares worth 1 lakh. You received for 40,000. So the difference was, okay. Then Q. From Q you are receiving shares of 60,000. No consideration, no difference. Yes or no? Paintings without consideration, paintings was 80,000. Without consideration. Artwork, for example, artwork was for inadequate consideration. No, artwork was 2 lakh rupees. And you got it for 1 lakh, 2,20,000. And I am eliminating this word. Okay, sir? Understanding? Now tell me, will you calculate the difference in the last case? Calculate, no, 20,000 difference. Fair market value is less and the consideration paid is more. Are you paying less or you are paying more? So don't calculate the difference in this case. There is no benefit arising in this case. Yes or no? So no benefit here. Now tell me, have you understood all these cases? Now calculate the value of gift from this. Come on. Final taxable amount under the head IFOS as gift. Calculate. During the year, you have received sum of money without consideration. During the year, you have received few assets without consideration. And during the year, you have received few assets for inadequate consideration. Three different cases are there. So first of all, aggregate sum of money. Aggregate received during the year. Is it more than 50,000? Full 1,20,000 will be taxable. So here, therefore, taxable value of what? Gift. Under section 56(2)(10). In that taxable value, what are you going to write? Aggregate sum of money is equal to during previous year 25, 26 without consideration was 1,20,000. That will be fully taxable. Yes or no? That will be fully taxable. Okay. Then you are supposed to take the aggregate fair market value of specified movable assets during the previous year. During the previous year 25, 26 which you have received. So only focus on what? Only focus on without consideration. Can you see without consideration? 10,000. Without consideration 60,000. Without consideration 80,000. So 80, 60 and 10. Is it more than 50,000? So entire 1,50,000 will be taxable. Now aggregate difference between what? Fair market value and consideration of what? Specified movable assets received during the previous year 25, 26 for what? Inadequate consideration, meaning the consideration is lower as compared to fair market value. So consideration was lower as compared to fair market value. Yes or no? Difference is 50. Consideration was lower than fair market value. Difference is, don't take this one, otherwise you'll be gone. Consideration is high and the fair market value is less. Ignore that. No gift is arising in that case. Gift is arising only in green. Color, green color. So what is the aggregate difference? So you have to take the difference of first asset, you have to take the difference of second asset. Individual difference? No. Aggregate of all those differences. Yes or no? If that aggregate is more than, how much was that? Entire 1,10,000 will be taxable. Now can you do the total? 3,80,000 will be the taxable gifts. Taxable gift under section 56(2)(10) under the head income from other sources. Will you be able to do it? Easy, difficult? Easy, no? Okay. Now two more cases. Last two cases. Now last two cases will cover immovable properties. Which properties? So color, red color. Immovable properties received during the previous year. Received during the previous year without consideration. So for immobile properties, guys, what will you check? Fair market value? No. You always check stamp duty values. What you check? See, for all assets, we usually check fair market value, but which is the most dependable and genuine value for the immobile property? It is not their fair market value, it is stamp duty value. Okay, no? So you have to check the aggregate stamp duty value. The answer is no. You have to check the stamp duty value of individual property. Here you are not supposed to do aggregate. Aggregate you will do for sum of money. Aggregate you will do for specified movable asset. But for immobile property, you are not supposed to do the aggregate. So individual property which you have received during the previous year for what? Inadequate consideration? No, without consideration. The stamp duty value of such individual property, because we are not doing what? Aggregate. So we are going to take stamp duty value of individual immobile property should be more than 50,000. Should be more than. Then this entire stamp duty value will be treated as your gift under section 56 to 10, and it will be taxable under the head salary IFOS. Did you understand this? Now what can happen? Immobile property, for example, one piece of land. During the previous year, I have given you a small piece of land, very small piece of land, only this much. The value of this was 40,000. Stamp duty value was, which is practically not possible, but still, in the examination, bloody they can make anything, yes or no? Right now, tell me, any immobile property you will get for a stamp duty value of less than 50,000. Almost every immobile property throughout the country, the stamp duty value will be more than 50 only. So single property is sufficient. Yes or no? No need to aggregate. So what if that plot of land which I have given you, small plot of land, the stamp duty value was 40,000. Nothing taxable since it is not more than. But what if the stamp duty value of that was 80,000? Then entire 80,000 will be taxable. Understanding or not? Don't mix all the limits, huh? Consider the 5 cases separately in the same way in which I have done in this solution. Understanding or not? Consider each case separately. So this case also separately you have to consider. Understanding? Now, what if you are receiving what? Immobile property received during the previous year for inadequate consideration. Sir, how will you come to know that the consideration is inadequate? If the consideration paid for the property is less than the stamp duty value, then definitely consideration is inadequate. So now you will have to find out the difference, that how much less you have paid. That is your benefit, yes or no? And that benefit will be treated as your gift if that difference is more than 50,000. But that difference has to be more than 10% of your consideration also. Not just more than 50,000. The difference must be more than 10% of your sale consideration also. So now the immobile property, you are going to take the aggregate difference between what? Stamp duty value and what? Consideration. Will you take the aggregate? No. Difference between the stamp duty value and consideration of such individual immovable property. That difference you have to check. Okay, no? That difference should be more than. That difference should be more than 50,000 and also more than 10% of consideration. If that difference is more than both these amounts, yes or no, only then that difference will be treated as your gift, taxable under IFOS. Will you remember this? Sure, sir. Now I will give you few examples on immobile properties also, so that you understand, yes or no. Now during the previous year 25-26, okay, property X, property Y, property Z, property A, all these properties are immobile property, guys. Which property? Immobile property. Okay, immobile property. So immobile property A, immobile property B, and immobile property C. Okay, sir. Now stamp duty value I will take. I will take the stamp duty value and I will take the consideration. And I will check the difference. I will check the. Now I don't have to do the aggregate. For individual property, I have to say. No need to do the aggregates. Getting my point? So now see, immobile property X, stamp duty value was 25,000. No consideration paid. No difference. For B, it was 10 lakhs. No consideration, no difference. Okay. Now, immobile property Y, the stamp duty value was 3 lakhs. And the consideration you paid was 2 lakh 80,000. 2 lakh 2,55,000. Okay, here. So what is the difference? 45,000. Perfect. Property Z, it was 30 lakhs. And how much you paid? 25 lakhs. Difference is 5 lakhs. Very good. Property A, it was 1 crore. 1 crore and it was 99 lakhs. Okay, difference is 1 lakh. And property C, consideration was, stamp duty value was 60 lakhs and you are paid 50 lakhs. Let's say 50 lakhs. Okay. So tell me the difference is 10 lakhs. And one more property I will write. Immobile property D. 90 lakh was the stamp duty value. You got it for 1 crore 1 lakh. What is the difference? No difference. Why? So now for each property you are supposed to tell me. Okay, no? First property. Gift there or not there? First property. Gift is there or not there? Not there. Gift is not there only. Even if you say gift, I'm talking from the point of view of Income Tax Act. 56(2)(10), gift there or not there? Why? Because first of all, you have received it without consideration. And the value, stamp duty value is more than 50,000 or less than 50,000? Since the stamp duty value is less than 50,000, so in my solution, for which property? Immovable property X. Immovable property X. What will be the taxable value? Nil. Why? Since the value is less than 50,000. Sure. Let's talk about why. Without consideration, inadequate consideration. Inadequate consideration. Can you see the difference? Is it more than? Difference is more than. See, difference is more than 10% of consideration. Consideration is how much? 2,55,000. 10% of that. So the difference is more than 10%. But the difference is not more than, it has to be more than 50,000 also. So since the difference is just more than 10%, that does not mean that it will be taxable as gift. The difference should be more than 50,000 also. Is your difference more than 50,000? So for immovable property, why? Since less than 50,000, not taxable. For Y, how much is the difference? For Y, difference is 45,000, which is more than 10%, but less than 50,000, hence it will not be taxable. Yes or no? Now immovable property Z. Come on, tell me. Can you see the difference of 5 lakhs? So that 5 lakhs is more than 50,000. And that 5 lakhs is also more than 10%. 10% of 25 lakhs will be 2,50,000. So difference of 5 lakh is more than 2,50,000 also, and it is more than 50,000 also. Yes or no? So immovable property Z. The difference was 5 lakhs. Is it more than 10% and also more than 50,000? Yes or no? So how much will be taxable? Full 5 lakh will be taxable as your gift. Understanding? Next one. 1 crore. Ayo, 1 crore. And consideration is 99 lakhs. Difference is 1 lakh, which is more than 50,000. But it is not more than. It should be more than 10% also. 10% of 99 lakh will be 9 lakh 90. Is your difference more than 9 lakh 90,000 or less than that? Nothing will be taxable. So immovable property A. How much was the difference? 1 lakh. This difference is more than 50,000, but less than 10%. Yes or no? Less than 10%. So the taxable value is nil. Why it was nil here? Because it was less than 50,000. And why it is not taxable? Because it is less than. Both the conditions should simultaneously satisfied. More than 50 also, more than 10% also. Yes or no? So immovable property B. Immovable property B. Without consideration, since more than 50,000, entire value is more than 50,000, entire value will be taxable. Full 10 lakh stamp duty value will be taxable. Are you getting it or not? Property C, 60 lakhs, 50 lakhs. Difference is, that difference is more than 50,000 also, and that difference is more than 5 lakhs also. 10% of 50 lakhs is 5 lakhs. Yes or no? So immovable property, well, this was B, no? Now immovable property C. What was the difference? 10 lakhs. Is that difference more than 50,000? Yes. And also more than 10%. So entire difference of 10 lakh will also be taxable. Last case. In the case of property C, in the case of property D, no gift is arising. Okay. So even if you don't write that property, then also okay. So now can you calculate? This 25 lakhs will be what? Taxable gift under section 56 to 10. Now if somebody will ask you, waking up you at night at 2 o'clock, you're sleeping and somebody wakes you up, that under which section the gifts are taxable? 56 to 10. Because you have written it so many times, you have seen it so many times, that this section you will remember only. 56 to 10. Gift. Gift under which section? 56 to 10. Under section 56 to 10, what is there? Gift. Understanding? Gift in the hands of recipient, the person who is receiving. Understood? So now pay attention. This will be taxable under the head IFOS. Done, sir? All the 5 cases, did you understand properly? That's it. This is gift. But the above provisions of gift under section 56 to 10 shall not be applicable in the following what? Cases. So there are certain cases, meaning I'm talking about exceptions. Very, very important. Now in all these cases you are not supposed to apply any of these provisions. Yes or no? The gift provisions are not applicable. Don't try and calculate the gift amount. Don't try and tax any amount as gift in these cases. So what are those cases? I am Dr. Hatlo, COVID 47. Shortcut to remember. So now I for inheritance or will. Because at the time of getting something on inheritance or will, you don't pay any consideration. So you are receiving everything without consideration. Whether cash or assets, you are going to receive without. Will you apply the gift provision? Amount is more than 50. You will charge that amount as gift. No. So on the occasion of, at the time of inheritance or will, any sum of money received, any assets received, whatever may be the value, yes or no? No need to charge them under the head IFOS as what? Gift. Because the gift provisions are not applicable at the time of receiving sum of money or assets on inheritance or will. Will you remember this? I for inheritance or will. I for. So I will write down, otherwise you will forget. But it is given in my notes, so no need to worry. But inheritance or will. Okay, no? First case. Second case, M for marriage. Whose marriage? Bloody, if you are going in someone else's marriage and taking a gift over there, that will be taxable for you. They will not just write gift on the occasion of marriage. No, 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 no. Gift on the occasion of the marriage of the assessee. Assessee, are you marrying? Yes. So on your marriage, whatever gift you are getting, that will not be taxable. Whether you get sum of money or you get some assets, any value, anything received at the time of, on the occasion of your marriage will not be taxable. So marriage of assessee, who is individual. Yes or no? So assessee. Are you receiving any sum of money? Yes. Are you receiving any asset? Yes. On the occasion of your marriage? Yes. No problem. Will not be covered by gift provisions. But sir, value is more than 50? Not covered. But sir, value is 2 crores? Not covered. Even if it is 500 crores, will not be taxable. That is why Gujaratis and Marwadis have such lavish weddings. Because Ambani's wedding you have seen, no? Such a huge expenses they have done. Now Anant Ambani would have received so many gifts. Different celebrities, different people, multi-millionaires have come to attend his wedding. And many have given some valuable cars, shares, this, that, what not bloody. He would have got at least gifts of hundreds of crores, thousands of crores on his marriage. Nothing is taxable. Only Anant Ambani will get, or his wife. She would have also got, no? So both the individuals getting married. On the occasion of the marriage, if the individual, on the occasion of own marriage, if the individual is getting what? Gifts, sum of money, assets, anything from any person, whether the person is a relative, non-relative, any person, it will be fully exempt. Will not be covered by gift provision. Because how the bloody hell we can cover that thing as your gift, as your taxable income? People are coming to bless you as a blessing, as a best wishes, good wishes. They are giving you something. We cannot charge it under the head IFRS. If we will start charging it, people will stop getting married. No, they will keep on marrying, but they will stop receiving gifts. Now, do you know that there is a difference between death and death anniversary? What is the difference? Death will happen once. Death anniversary will come again and again. No? So, that same difference is there between marriage and marriage anniversary. Marriage happened once, but the anniversary is celebrated every year, no? So we are exempting the gifts on the occasion of marriage. But what if you every year celebrate your marriage anniversary and you get some gifts on marriage anniversary? Then those gifts will be taxable. There section 56.210 will apply. 56.210 will not apply in this case. Now somebody will have doubt. Now this is a trend, no, in the recent days. I don't like with you. Divorce. So I will get married to some other person. So sir, if I am getting married for the second time, that time if I will receive, so there is no restriction on the number of marriages. Yes. Maximum 2 children. No, nothing like that. Maximum 2 marriages. If you are marrying for 50th time, which is not possible only, okay, even if you are marrying for the second time, even if you are marrying for the third time, whatever number of time you are getting married, that is not important. The gift should come on the occasion of your marriage. See, first of all, tell me, no, on your first marriage, no, people will be very happy. Yes or no? They will happily come to attend your wedding and happily they will be giving you gift. But on your second marriage, no. They will be sad, but still they might give you gift. On the third time when if you will marry, no. First of all, no one will come. And even if anyone will come, no, they will just give you blessings. Gift. Understanding or not? So there is no restriction. If somebody might have that doubt, sir, what if I'm marrying for the second time? Second time marrying, gift received on the occasion of marriage. Now, this occasion comes in your life again and again. Government has nothing to do with that. That is your personal life. Yes or no? So if you are getting married for the second time or you are getting married for third or fourth time, on the occasion of your marriage, if you are receiving that gift, will not be taxable. And people will not do, for the purpose of tax planning, they are not going to do marriage again and again. One person you cannot handle. You will handle marriages with so many people. Understanding or not? So I for inheritance or will. M for, see, on my marriage, my father got gifts. Is it my father's marriage or my marriage? But usually happens, no? When the child is getting married, the parents also get gifts. Those gifts are not exempt in the hands of parents or relatives. Because opposite side family, see, the girl side family might give some gifts to the groom side family. Yes or no? Groom is going to get so many things. But groom's father, groom's mother, groom's sisters, brothers, they are also going to get gifts, no? Will those gifts be exempt in their hands? No, because that is not your marriage. On the occasion of marriage of the individual, whatever that individual will get will not be taxable for him. But other relatives like parents, sisters, brother, they are going to get gifts on the occasion of my marriage. Those gifts are taxable for them. Will be covered by 56 to 10. Getting my point? Now next one. Hey, do you know Shashti Purti happens? What is that? 60th birthday. And it is celebrated. Marriage is celebrated. Sir, what if the gift is received on Shashti Purti? That is not a marriage. That is a marriage-like function where the old couple, they are again remarried on that date. Yes or no? That is just a symbolic function to celebrate the years of togetherness. That does not mean getting married. But you are already married. This function is happening to just celebrate that 60th birthday. Yes or no? That does not mean that it is a marriage. So on Shashti Purti, whatever you are going to get, that will be covered by gift provisions. Yes or no? Now, I for inheritance or will. M for marriage of the assessee. D for death contemplation. D for, what is death contemplation? The last wish of the person who is on the deathbed. As my last wish, I want to give away my bank balances, my assets to one of my relatives. Because I don't have any, family, close family. But I'm very rich. So there is one servant who has taken care of me in my last days. So while going, I'm about to die now. While going, I want to give my bank balance to Ramu Kaka. This is my last wish, that this bank balance, 50 lakh rupees, should be given to Ramu Kaka. This is my last wish. See, if I survive, no, then this will not happen. But if I die, so in the contemplation of my death, I'm giving something. Yes or no? I immediately remember that there is a nephew who lives in Gujarat. I will call him. That see, I'm about to die now. As my last wish, I want to give you this business. I want to give you this asset, this land I want to give you. So as the last wish of the person who is on the deathbed, whatever is given in contemplation of death. seeing the death nearby. Yes or no? The person is giving something as a last wish. Even that will not be covered by gift provisions. Getting my point? So I, inheritance will, M, marriage, D, death contemplation, and this point is really very important. Anything you receive from your relatives, sum of money, assets, with consideration, without consideration, gift provisions will not apply. Because you are receiving them from. Now, India is my country. Do you remember? When we were children, in our school, we used to take that pledge. India is my country. All Indians are my, except one. I used to say that. Because I never know that the person whom I am going to get married, she will be also an Indian. No, I will not treat her as what? Brothers and sisters. No, 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 no. Except one. All are my brothers and. India is my country. All Indians are my. Meaning all Indians are my relatives. So any Indian can give me the gift. I am getting the gift from. Relatives are defined. Relatives are defined. So, if the assessee, what did I say? If the assessee is an individual. Okay, no? So, I will make this assessee. This is an individual. So, for this individual assessee, who is a relative? So, if any of these relatives giving you sum of money, any of these relatives giving you some assets, with consideration, without consideration, gift provisions will not apply. But the gift should be coming to you from these relatives. Understanding? For any individual, no. The first and foremost relative is spouse. Risk cannot be taken. Yes. Even the lawmakers are very afraid of their spouses. If I consider someone else as my first relative, bloody I might not get food at home. Amma is your first relative. No, go ask for food from your amma. Life partner, first. Who is the first and foremost relative? Life partner. She is going to stay with me forever. I am going to stay with her forever. Now the things are different. Okay, no. But the spouse will be the first relative. Whose spouse? Whose spouse? Bloody your spouse. Individual. If I am saying spouse, no. The spouse of any person is not your relative. Your spouse is. Sir, what if I don't have a spouse? Who will be your relative? Your spouse will be your relative, no? Ayyo. So point number one, spouse. Spouse of such individual. Spouse of such individual. Yes or no? Number two, brothers and sisters of such individual. Just think, just think. I have made spouse, my spouse as my relative. Immediately after that, I told that my brothers and my sisters are my relative. Danger. Your brother is your relative. Your sister is your relative. My brothers and sisters are no one to you, no? Again there will be a problem. No, 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 no. Madam. Your brother and sister are also my. Meaning, the brothers and sisters of my spouse, they are also my relatives. My brother-in-law, my sister-in-law. Yes or no? So, bro and sis of the spouse of such individual. Yes or no? Now number 4. Again, bro and sis of parents of such of such individual. So are you an individual? Yes. Do you have parents? Yes. Everyone has parents, no? So brother and sister of your parents, meaning your uncle and your aunts from maternal side as well as paternal side. Both are your relatives. Understanding? So your parents I am saying. I am not saying the parents of your spouse. So the brothers and sisters of her parents will be her relative, not the relative for me. For me, the brothers and sisters of my parents, they are my relatives. Understanding or not? My brother, my sister, my relative. Okay, your brother also my relative, your sister also my relative. Yes or no? Brothers of my father, sisters of my father, brothers and sisters of my mother, they are also my relatives. Yes or no? Then point number 5, lineal ascendants. Lineal ascendants and lineal descendants of such individual. So lineal ascendant means my previous generations, my father, his father, forefathers, yes or no? So the generations above me are lineal ascendants and the generations after me are my lineal descendants. So my lineal ascendant, my father, grandfather, great-grandfather, yes or no? My lineal descendants are my children, grandchildren, great-grandchildren, they are my lineal descendants. So individuals, lineal ascendants, individuals, lineal descendants, yes or no? And point number 6, lineal ascendants and lineal descendants of spouse of such individual. So even the lineal ascendants of my spouse and lineal descendants of my spouse are also my relatives. Sir, there is some problem here. Sir, your lineal ascendants and your spouse's lineal ascendants, they're not same. They have to be different. My father will not be her father. If that is the case, then the relationship is different. My lineal ascendants different. My earlier generations, yes or no? My father, my grandfather, my great-grandfather, they will be different. And my spouse's lineal ascendants will be different. They cannot be same. If they are same, then we are brothers and sisters, not husband and wife. Understanding or not? So lineal ascendants have to be different. Yes or no? But sir, this is something which is bothering me. How your lineal descendant and your spouse's lineal descendants are different? You will have common children, no? Absolutely valid question. The generations after me, meaning my children, my grandchildren, my great-grandchildren, they will be same for my spouse also, no? Then why are they writing like this? Lineal descendant of the spouse also, same only. Can be different. I got married for the second time. So my lineal descendant from my first marriage were different. And the lineal descendant of my spouse from her first marriage can be different, meaning my stepchildren. They are also covered. They are lineal descendant of me? No, they are lineal descendant of my spouse from her first marriage, meaning my stepchildren. They are also covered as my relatives. Getting my point? Majority of the case, same only, lineal descendants, yes or no? But sometimes it can be different. In the case of stepchildren, children from first marriages, yes or no? Previous marriages. Now point number 7, spouses. Don't take it wrongly. Spouses? It should be spouse only, no? No, no, spouses. Spouses of 2 to 6. 2, 3, 4, 5, 6. Even their spouses are my relatives. Sir, why you did not cover point number 1? Good question. I would not like to answer. Bloody, who will be the spouse of my spouse? Myself only, no? Hence, point number 1 is not covered. Point number 2 to point number 6. So, my brother and sister, my relative. My brother, my sister, my relative. Point number 7 says, their spouse is also my relative. Brothers and sisters of my spouse, my brother-in-law, my sister-in-law, they are my relatives. Even their spouses are also my relatives. Brothers and sisters of my parents, they are my relative. My uncle, my aunties, yes or no? So, their spouses are also my relatives. My lineal ascendants. My father. Did I come only from my father? Or my mother was also required? My fathers are my forefathers, meaning my father, grandfather, great-grandfather. They are my lineal ascendants. So their spouses, meaning my mother, my grandmother, great-grandmother from both the sides, maternal as well as paternal. Yes or no? They are also my relatives. My lineal descendants, my children, grandchildren, great-grandchildren. So their spouses also. If my daughter is there, then my son-in-law. If my son is there, then my daughter-in-law. Yes or no? If my grandson is there, then the wife of my grandson. If my granddaughter is there, then husband of my granddaughter. Getting my point? Then lineal ascendants of my spouse, meaning father, grandfather. So their spouses also, meaning my father-in-law, my mother-in-law, my my grandfather-in-law, my grandfather-in-law, spouse of grandfather-in-law, grandmother-in-law. Yes or no? So they are also my relatives. So point number 2 to point number 6, whatever relatives are covered, even their spouses are also my relatives. So I am an individual? Yes. I am going to receive any sum of money, any asset without consideration, inadequate consideration from these relatives. From these relatives, it will not be taxable under the head IFOS. Gift provisions are not applicable. Now tell me, for me, my mother's brother, is he my relative? What do you call him? Mama. He is my relative. So if mama gives me something, my mother's brother, if he gives me something, will it be taxable for me? But what if I give anything to my mama? It will be taxable for my mama. Because from his point of view, I am not his relative. Because I am his sister's son. My brother and my sister are my relative. Yes or no? But their children are not my relatives. So from the point of view of my mama, yes or no? My mother will be relative. My mother's children, me, will not be a relative. If he will give me, will be exempt for me. But if I will give him, will be taxable for him. Understanding? So you have to take an individual. And take this individual and any of these relatives giving you. Only then it will be exempt. If the relative is anyone other than this, then the gift provision will apply. Only from these relatives, if the gifts are coming, will not be taxable. Understanding? Now, if the assessee is a HUF, Hindu Undivided Family. Have you heard about it? So will HUF receive some gifts from relatives? Yes or no? Who will be a relative for HUF? Any member. Any. So if member is giving gift to HUF, will not be taxable in the hands of HUF. Or if the HUF is giving to the member, then also it will not be taxable. Because for HUF, if the member is relative, understanding? So here they consider, there are few case laws also, that for HUF, if member is relative, then for member also the HUF should be relative. Understanding? Everyone? So it will not attract any capital gain. Sorry. It will not attract any gift provisions. Will you remember? Now if the assessee is any other person, meaning other than individual, other than HUF, then who will be the relative? Who will be the relative? No relatives. They cannot say, company cannot say that I have received the gift from relative. Firm cannot say that I have received the gift from relative. Who is your relative, bloody? Father. What father you have? Mother. What mother you have? They're artificial persons, no? You will not have relatives. You will have related parties. For you, the relatives does not exist only. Getting my point? So no relatives are prescribed for them. That means they cannot take the exemption saying that we have received the gift from relatives. Who can receive the gift from relatives? Only individuals and HUFs. Individual from these relatives and HUF from any member. Getting my point? Hello, sir. So I for inheritance. M for whose marriage? Assessee's own marriage. D for death contemplation. R for, did you understand these points? Now please listen to me carefully. H for hospitals and medical institutions. U for universities and educational institutions. Don't worry, I'm writing. Don't worry, I'm writing. U for universities and educational institution. T for trusts and charitable institution. LO means local authorities. If you give to them or they give to you, will not be treated as gift. If you give them, it is a help extended by you. Or if they give you, it is a help given by them. Charity, donations and all. Getting my point? So will not be covered by gift provisions. So H for hospitals and medical institutions. U for universities and educational institutions. Then T for trusts and charitable institutions. LO means local authorities. Yes or no? If gift given to someone or if gift received from someone. Yes or no? So if they receive, will not be covered by gift. If they give to someone, to that someone, gift provision will not be applicable. Understanding? So if they are the payer and you are a recipient, will not be your gift. If you are a payer and they are the recipient, then will not be covered by gift. Understanding? Now the next one. Any sum received without consideration as financial assistance. You may say that it is a help. Help for what? For treatment of COVID related diseases. So a disease is there, and that disease is a COVID related disease, and for the treatment of that COVID related disease, you got some financial help from someone. Yes or no? Will not be treated as your gift, whatever may be the amount. But provided you have to prove that the amount received by you without consideration is a financial assistance, is a help from someone for the treatment of this disease. So you'll have to submit the COVID related papers, the medical bills, the doctor's prescriptions and everything. So based on those evidences, if you prove that the amount given without consideration was a financial help, financial assistance for the treatment of, medical treatment of COVID related disease, then it will not be taxable under the gift provisions. Understanding? Or if the sum is given as a financial assistance, help, okay, help to the family members of a person who has died due to COVID related ailments or disease. So a person who has died because of COVID related disease, yes or no? Now, if any financial assistance or financial help is given to family members of such person, yes or no, then even that will not be covered by gift provisions. But for that, such assistance must be received. Assistance must be received within 12 months of DOD, date of death. So the person who has died, from the date of his death, within 12 months, that assistance was given. Okay. And if assistance is given by employer of such person, then any amount, whatever may be the amount of financial help, will not be taxable. But if the assistance was given by any other person, then maximum 10 lakhs. Up to 10 lakhs, the financial assistance will be given, will not be taxable. But if it is more than 10 lakhs, then it will be fully taxable. Understanding or not? So if my family members, if a person dies because of COVID, now he has a family members, like his widow is there, children are there, old aged parents are there, okay. So the relatives or other family members, they will come together and they will give what? Some financial help for that poor family. Amount should be 10 lakh rupees or less. And if the employer of that person gives, then any amount. But that amount should be received as a financial assistance within 12 months. 12 months of the date of death of that person. And provided other conditions are also satisfied. What conditions are there? Proof of the death. In the death certificate, it will be proved that the death is because of COVID related ailment. Understanding? So this help, this financial assistance will also not be treated as gift under section 56 to 10. Okay. Now, last point. Have you heard holding company gives capital asset to 100% subsidiary? 100% subsidiary gives to holding in the scheme of amalgamation, amalgamating company giving the assets to amalgamated company. In the scheme of demerger, demerged company giving assets to resulting company. Yes or no? HUF on the partition giving to members. Do you know all those transactions? So those transactions were under capital gain under section 47. So if any capital asset is received by the assessee, is received by way of certain specific transactions given under section 47. So for the person who is giving the asset is a exempt transfer, yes or no? But for the person receiving that asset, it will not be treated as gift. So if the holding company is giving, the transfer is exempt. So will it be treated as a gift in the hands of subsidiary? No. Exempt. Not treated as a gift. If subsidiary is giving to holding, then transfer is exempt in the hands of subsidiary as per section 47. But that will not be a taxable gift in the hands of holding company. If amalgamating company is giving in the scheme of amalgamation, then exempt. But that does not mean that it will be a taxable gift in the hands of amalgamated company. Understanding? If HUF is giving to its member, then if HUF is giving to its member on partition, then exempt in the hands of HUF. Transfer is exempt. But that does not mean that for member it will be a taxable gift under the head IFOS. Understanding or not? Sure? Okay. So all the transactions of section 47? No. Certain specific transaction. But you are not supposed to get into details of those transactions. Okay, no? Will you remember? I am Dr. Hatlo COVID 47. COVID-19 was there, no? But our COVID is 47. Okay. So these are the exceptions. And with this the gift provisions are over. But two things very, 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 very important to know. Number one, very, very important. Please pay attention. Huh? Are you a recipient? Receiving what? Gift. So the asset received without consideration or for inadequate consideration must be received as a capital asset by the recipient, meaning assessee. So assessee, have you received that asset? So that asset coming in your hands must be your capital asset. When you receive it, at that time, it should have been treated as your capital asset. Only then, what did I say? Only then 56 subsection 2 gift provisions will be applicable. But if the asset received by you is not coming in your hands as a capital asset, rather it is coming in your hands as a stock in trade, then it will not be treated as your gift. 56.210 will not apply on that asset which you are receiving as your stock in trade. 56.210 will apply in your hands. Gift will be taxable in your hands only if the asset is received by you in the form of capital asset. Now let me give you one example. It will make sense why they are saying you like this. Okay. For example, I am giving you jewelry. I am giving you, okay, no? You are, for example, you are a property dealer. Who are you? So your business is to deal in properties, no? So whatever properties you are going to have, those properties will be your stock in trade. But if I give you jewelry, will that jewelry be a stock in trade of your business? So if I am giving you that jewelry, if I am giving you that, will you receive that jewelry as your capital asset? Then gift provisions will be applicable on you. without consideration, inadequate consideration, yes or no? For example, the jewelry, value of the jewelry which I am giving is 5 lakh rupees. How much? And I'm not charging anything from you. 5 lakh worth of jewelry I'm giving you without consideration. So that entire 5 lakh will be taxable for you under the head IFOS as your gift, because you are receiving that jewelry as a capital asset. For you, that jewelry is a capital asset. What if that 5 lakh worth of jewelry I'm transferring you for inadequate consideration? Against that you are giving me 2 lakh rupees. So have I transferred the jewelry worth 5 lakhs? For how much? 2 lakh. So are you taking that jewelry without consideration or inadequate consideration? Inadequate consideration. And how much was the consideration you paid? 2 lakh. And how much was the value of the jewelry? 5 lakhs. Difference is that 3 lakh will be taxable as your gift. 3 lakh will be taxable as your understanding or not? Why? Because the jewelry is coming to you as your capital asset. But the same example, if I say that you are a jeweler, will you now receive the jewelry as your capital asset or your stock in trade? So definitely you are going to receive that jewelry for a lower price only, no? You will buy the jewelry at lower price so that you sell it at a higher price, and the entire gain you are already charging under the head PGBP. Then why that gain should be taxable as your gift? For example, you are buying jewelry. What was the value of that jewelry? 5 lakh. So you bought that jewelry from me for 4 lakhs. Definitely as a jeweler, you are going to buy your stock in trade for a lower price only, no? So what was the gain? That 1 lakh will not be taxable under the head IFOS. Because gift provisions will not be applicable. Why? Because anyways that 1 lakh rupees of gain is going to be taxed in your hands under the head PGBP whenever you are going to sell that jewelry. Now for example, you are selling that jewelry for 6 lakh rupees. So what will be your business income? 6 lakh minus the cost of jewelry was 4 lakh. You will reduce 4 lakh under the head PGBP. Entire 2 lakh rupees including this 1 lakh rupees will be taxable as your PGBP income. So bloody if that amount is already getting taxed in your hand sooner under the head PGBP, and it is going to happen very soon because you are going to take it as a stock in trade and you are not going to keep your stock in trade for n number of years. Very soon you are going to sell that jewelry as your stock in trade, and very soon this 1 lakh will be taxable as your income under the head PGBP. Then why to make this 1 lakh rupees as your IFOS income? Why to make this 1 lakh rupees as your gift right now? Hence, the asset should come to you as capital asset. Now tell me, if that same incident takes place, 5 lakh rupees was the value of the jewelry. Hello? Are you a jeweler? No. You are not a jeweler. So you are taking that jewelry as your stock in trade or a capital asset. And the beauty of the capital asset that you hold it for long period. Now tell me, do you have a gain of rupees 1 lakh right now? Do you have a benefit of rupees 1 lakh? This benefit will be taxable when you will actually sell the jewelry, no? As your capital asset. And when that is going to happen? Maybe after 2 years, maybe after 5 years, or maybe never. Then why not to charge it right now under the head IFOS as your gift? Later on when you will sell this, no, that time this 1 lakh will not be taxable. But right now let us tax this 1 lakh, because we don't know that when you are going to realize this 1 lakh in the future, because you have received that asset as a capital asset. Hence the gift provision wants that the asset received by you must be a capital asset in your hands. Understanding or not? Did you got the logic? So now if in the question they are telling you that the assessee is a property dealer, assessee is a receiving immobile property inadequate consideration, and still you are charging that amount under the head IFOS. Understand? Who are you? Who are you? Property dealer. What is coming to you? Property, immobile property. Don't you think that will be a stock in trade? And bloody still you are applying gift provisions. You are a mad person only, no? Sir, the stamp duty value was more than 50,000. So what? Sooner or later, that amount is going to be taxed in your hands as your PGBP income. Why are you applying gift provisions? So remember, the asset received, what did I say? Asset received, whatever type of asset, immobile property, specified movable asset, yes or no? Without consideration or for inadequate consideration must be, what did I say? Must be received as your, I have written in bold capital letters, by the recipient. Only then the gift provisions will be applicable. And the value of that asset or the difference of that asset will be taxable as your gift under the head IFRS. But if you are receiving that asset in any other form, which is not a capital asset, for example, it is stock in trade, yes or no? Or the asset received by you only is not a capital asset only. For example, you are receiving a car. Car is a capital asset. Car itself is not a capital asset, then how are you bloody able to receive that as capital asset? I am gifting you a car. Car is a capital asset. No. Hence they have told specified movable assets. Because only the specified movable assets can be treated as a capital asset. All movable assets cannot be treated as capital assets. So any other movable asset, they cannot come in your hands as your capital asset only. Hence, they are out of the purview of gift provisions. So if someone is giving you car, will not be taxable. So it is a tax planning point of view. If someone is going to give you jewelry, don't ask for jewelry. Tell them, give me a car. Someone is going to give you cash. No, don't give me cash. Give me iPhone 17 Pro Max. Because all these assets are not specified movable asset. Even if they will come in your hands, they will not be treated as your capital asset. So this is a tax planning point. Why? And the government is least bothered about these items. Because these items are not going to, the value of these items are not going to increase. Understanding? So even if you will take it, go, enjoy. Car you will take, no? Take the car, enjoy. We don't want to charge tax on each and every transaction, but at least we will not leave those assets whose value will increase in future. Understanding or not? Sure, one very important point. Now the second point which I want to bring your attention to, second point, very important point. Now see, this is Mr. A. Now I am correlating capital gains with gift provisions, yes or no? This is Mr. A. Now Mr. A has transferred what? Immovable property. Immovable property to Mr. B. So my first question should be, is Mr. B receiving that immobile property as a capital asset? Tell me yes or no. If the answer is yes. So first of all, see, this immobile property must be a capital asset in the hands of Mr. B, who is a recipient. Now this immobile property is given without consideration, without, understood? Meaning, now let's talk that without consideration, and the stamp duty value of this asset was 10 lakh. Did you understand the entire transaction? Now first we will not talk about B. B is a recipient, no? For B, IFOS gift provisions will be applicable, yes or no? We will not talk about B first. We will talk about A. A is giving that asset to you. Hello? A is giving that. Is A charging any amount from you? So can I say A has transferred his capital asset by way of gift. A has transferred his capital asset, immobile property, by way of, tell me, do you remember anything? If you are an assessee, individual or HUF, you have transferred your asset to any person by way of gift. Without consideration means gift, will, inheritance, irrevocable trust. Yes or no? Then for you that transfer is an exempt transfer. So for Mr. A, which provision will apply? Section 47 of the capital gains. Yes or no? So Here for Mr. A, section 47 will apply, and capital gain will be calculated or will not be calculated? Will not be calculated. Now see, Mr. A had acquired this asset. A had acquired this cost of the immobile property, cost of acquisition in the hands of Mr. A. I am writing a little bit here, okay. The cost of acquisition of this immobile property in the hands of Mr. A was 4 lakhs. Yes or no? Which he incurred in the year 9-10. So in the year 9-10, Mr. A acquired this asset for how much? 4 lakhs. And today the stamp duty value of that asset is 10 lakh. At that time the asset is given. Today meaning the date of gift. Okay, no? So let me say 11th of, this is 25-26. Previous year 25-26. So in this year, whenever that asset was given, that immobile property given, at that time the stamp duty value was 10 lakh. Can you see there is an appreciation in the value of the asset? 6 lakh rupees will not be taxable in the hands of A. Will not be taxable in the hands of, because the transfer is an exempt transfer. And now that appreciation will be realized by whom? Mr. B. So should be taxable in the hands of Mr. B. And do remember, when the B will transfer that asset later on, what will be the cost? 49(1). Cost to previous owner, because B has acquired the asset by way of mode specified under section 49(1). Yes or no? B has acquired the asset by way of gift. So for B, 49(1) will apply. And what will be the cost? Cost to previous owner, 4 lakh rupees. Meaning this 6 lakh, which is not taxed in the hands of Mr. A, will later on be taxed in the hands of Mr. B. When Mr. B will transfer that asset, that time it will be taxable. Yes or no? Along with the appreciation which happened when B was holding the asset. Understanding? But this is possible only if the gift was not taxed in the hands of Mr. B. Only if the gift was not taxed in the hands of Mr. B. So first of all, tell me, did you understand what is the effect in the hands of A? A cost was 4 lakhs. Today the value of the asset is 10 lakhs, stamp duty value. What is the appreciation? Will not be taxable in the hands of A. Why? Because for A, it is an exempt transfer. Understood? Now who is receiving that asset? B is receiving the asset. B is a recipient. So B is receiving an asset by giving some consideration or without consideration. And he is receiving this asset from? He is receiving that asset from A, no? So now tell me, for B, gift provision will be applicable or will not be applicable? The value of the asset received is more than 50,000. So this amount should be taxable under the head IFOS. As gift, no? Will not be taxable because Mr. A and Mr. B are so now Mr. B is getting the gift from relative. Mr. B is getting the gift from. So will it be taxable in the hands of Mr. B? So see here now for Mr. B, section 56 subsection 2 clause 10, yes or no? How much would have been the amount? Stamp duty value amounting to 10 lakh would have been fully taxable, would have been, but it will not be taxable in the hands of Mr. B. Why? Because B is getting that amount, getting that asset from relative. Yes or no? Hence 10 lakh is not taxed right now in the hands of Mr. B as his gift. Understood, no? Now later on this asset is transferred by Mr. B for 15 lakhs. Sorry, 12 lakhs. Possible, not possible? So now I will write if. So I am writing gift provisions. Gift provisions not applicable. That I have crossed, that means gift provisions are not applicable because it is coming from relative. Now I am writing later on Later on, Mr. B sold this asset, this immobile property, for 12 lakhs. Possible or not? Now what Mr. B is selling, tell me? His capital asset, because the asset came to him as a capital asset. Gift provision will be applicable but did not apply. Why? Because it is coming from relative. Understanding? Now tell me, later on, if Mr. B is transferring the immobile property for 12 lakh, meaning he is transferring his capital asset. He is transferring his. Can I say he transferred this in the same year, 25-26 itself? Yes or no? So he received in 25-26. For example, in the same year he is transferring also. So holding period is less than 24 months in his hands. Yes or no? But will it include the holding period of the previous owner? Depends. If 49(1) is applicable, then cost to previous owner will come, period of holding of previous owner will come, and in this case 49(1) will come. See, whatever cases we have done in the capital gain, no, is this case only. We have done this case in the capital gain. All the cases we assumed that the gift received was not taxed in the hands of recipient, and we applied 49(1) in all the cases in capital gains chapter. But what difference will be there, no? First of all, I will have to teach you that what we have already studied. We have studied this only. Now later on, if Mr. B will sell, tell me, will you calculate capital gain for Mr. B? To calculate that capital gain, what will be the full value of consideration? Tell me. Full value of consideration will be 12 lakhs. Minus transfer expense. What is the transfer expense? Nil. So what will be the net consideration, guys? 12 lakhs. Now comes the most important thing. What will be the cost of acquisition? See, 4 lakh to 10 lakh. 6 lakh gain. Not taxed in the hands of A. And neither it was taxed in your hands at the time of receipt. Under the head IFOS. And then 10 lakh to 12 lakh, 2 lakh gain. How much total gain you are realizing? 8 lakh gain, 6 lakh for the period of holding of the previous owner, and 2 lakh for your period of holding. That entire gain should be taxed in your hands. Now under the head capital gains, at the time when it will be realized. Yes or no? Hello? So for that, your cost of acquisition will be as per 49(1). Tell me, how much? 4 lakhs. Cost to previous owner. You have taken the cost of acquisition as per 49(1), meaning cost to previous owner. Okay, no? Now if you have taken the cost to previous owner, what will be the gain? 8 lakh. Now tell me, what will be the nature of this gain? Long term or short term? Long term. Because bloody the period of holding, your period gain is also getting taxed, and the gain of Mr. A's period of holding is also getting taxable for you. So you take both the period of holding, no? And I have told you, whenever you will take 49(1), you will always take the period of holding of the previous owner also. So what was the period of holding? From 9-10 to 25-26. Yes or no? So from 9-10 to 25-26, meaning date of acquisition by Mr. A to date of transfer by Mr. B. Yes or no? So this period is more than 24 months, hence the gain is long term. Did you understand this entire exercise? This we have already done and we know this thing. Now what I will do, you know? My best thing which I know, copy and then paste. Okay? Same to same example. Okay? Same to same example. One small line That's it. For Mr. A, no, the effect will not change. A is transferring the asset without consideration. Section 47, transfer is exempt. Hello? No capital gain will arise. Now tell me, B is receiving that asset as his capital asset. For B, now the gift provisions will be applicable. Because B is getting that asset from A, who is not his relative. So if you are getting the asset from the relative, then the gift provisions are not applicable. And if the gift provisions are not applicable, gift is not taxed in your hands, then you apply 49(1). Hello? But now the gift provisions will be applicable. And if gift provisions are applicable, then the entire stamp duty value of 10 lakh will be taxable in your hands under the head IFRS, meaning that right now only that 6 lakh of gain, which was to be taxed in the hands of A at the time of transfer, which could not be taxed in the hands of Mr. A, will be taxed in your hands the moment you will charge this 10 lakhs under the head IFRS. Now, since that entire gain is already taxed in your hands under the head IFRS, now later on if you will take 49(1), no, it will be a blunder. Now you cannot take 49(1). Now your cost will be 49(4). Your cost will be only the gain for your period after you have received the asset will be taxable under the head capital gain. Why? Because the gain for the earlier period is already taxed in your hands under the head IFRS the moment you have shown that amount taxable as your gift. So right now, tell me, for A, there is no change. For B, what is the value of the asset? 10 lakh. Is it more than 50? Yes. Entire 10 lakh will be taxable under the gift provisions, under the head IFRS. Now, if that same amount is later on sold by Mr. B, for how much? 12 lakhs. So, will Mr. B calculate capital gains? Yes. Because for him, the asset is coming as his capital asset. He will calculate capital gain. Full value of consideration, transfer expense, everything you are going to do. But now, if you will take cost of acquisition as per 49(1), you will be gone. Because if you will take that cost of acquisition of 4 lakhs over here, as per 49(1), cost to previous owner, what will happen? You know, the previous owner's gain, which is already taxed in your hands under the head IFRS as your gift, will again be taxed for the second time. If you want to pay tax on that gain for the second time, then take cost to previous owner. You want to pay tax on that gain for the second time? Or you just want to pay tax for your period of holding? Then don't take 49(1). Even if you have received the asset by way of gift, which is a mode specified under section 49(1), still your cost will not be 49(1). Why? Because for you, at the time of receipt of that gift, already the gift provisions are made applicable. Then you cannot apply 49(1). Now you will have to apply what? 49(4). Which section you are going to apply? And what 49(4) says? You know, the value of that asset which you have already considered for gift provisions. So what was the value of that asset which you have already considered for gift provisions? Tell me, guys. This 10 lakh rupees of stamp duty value will be deemed to be your cost of acquisition. And there, in the last case, which amount we took? 4 lakhs. Cost to previous owner. This cost of acquisition to the previous owner, we have taken that amount as cost of acquisition as per 49(1). But in this case, we cannot take cost to previous owner. We cannot apply 49(1) because the gift has already been taxed in your hands. That gain, which was supposed to be taxed in your hands as a capital gain, has already taken care of under the head IFRS when you charge the gift in your hands. Understood? So how much will be the cost of acquisition now? Tell me. It will be 10 lakhs. So how much gain will be taxable? Only the gain after the gift is received by you for your period of holding. Yes or no? Will you charge the earlier gain or only the gain of your period of holding? So take only your period of holding. No need to include the period of holding of the previous owner. Because you will take the period of holding of the previous owner, only 49.1 is applied. In this case, 49.1 is not applied, and now your gain will be only for your period of holding, and take your period of holding. When did you acquire the asset? As on the date of gift. Yes or no? So date of acquisition by Mr. B as what? Gift. From that date till the date of transfer by Mr. B. This will be the period of holding. And in 25-26 you have received, and in the same year, after holding for some time, you are selling there. Then gain will be long term or short term? Short term gain. Did you understand this? Now apply some logic. Logic and logic. You got the asset free of cost. Mr. A gave you the asset free of cost. Tell me yes or no. And that asset you are selling for how much? How much is the gain? 12 lakhs. Out of that, 2 lakh is taxed under the head capital gain, and 10 lakh taxable under the head IFOS. Common sense. Hello? Did you understand? What did you understand? The asset came to you free of cost, no? As a gift, no? From a person who is not your relative, no? So that asset, if you will sell later on for 12 lakh, entire 12 lakh is your gain. Out of that 12 lakh, 10 lakh is taxed under the head IFRS. So now under the head capital gain, how much should be taxable? 2 lakh. So for that, you will have to take that 10 lakh as your cost. Simple. Understanding? But if you would have taken 4 lakhs, then your gain would have been? Then your gain would have been 8 lakhs. That means Mr. A's period of holdings gain, which is already taxed in your hand under the head IFOS, in that 10 lakh will be again taxed for the second time as your capital gain. If you want to charge second time, then take 49.1. Otherwise take 49.4. This is the reason why I left 49.4 over there. If I would have told you, you would not have understood only. Because without gift provisions, I cannot touch 49.4. Understanding? Now that 49.4 from capital gain is also over. Now 2 more cases I will create in front of you. You want me to create 2 more cases? Now please pay attention. This is Mr. X. Okay. He has some immobile property. The cost of acquisition of that immobile property was what? Same example I am taking, 4 lakhs. He incurred that cost in which previous year? 9-10. Yes or no? So cost of Mr. X has transferred that immobile property to Mr. Y. Mr. Y. Okay. So what Mr. X is transferring? Tell me. Mr. X is transferring immobile property for 8 lakh rupees. For how much, sir? Hello, sir. Mr. X is transferring for a consideration. He is not transferring without consideration. Now from Mr. Y, 8 lakh will be given. But the date on which it was transferred, you will have to check the stamp duty value also. Yes or no? So as on the date of transfer, the stamp duty value, so stamp duty value as per date of registration, as per date of sale agreement. So for the gift provisions also, you have to apply that same logic as on the date of registration. But you can take the date of sale agreement also if the consideration, meaning 8 lakh or any part thereof, is paid by Mr. Y to Mr. X on or before the date of sale agreement by way of prescribed modes. Then stamp duty value as on the date of sale agreement will be taken. Otherwise the date of registration. Yes or no? So let's say the stamp duty value was 10 lakhs. How much? Okay. Now this property was given by Mr. X. This property was given by Mr. X to Mr. Y. Okay. So date of transfer, for example, the date of transfer was 19th of October 2025. On this date, the property was transferred. Okay. Now it is given to Mr. X. So Mr. Y is receiving that property as his capital asset. Yes or no? So in the hands of Y, the property is coming as capital asset. And Mr. X and Mr. Y are relatives or not relatives? First of all, let's say he is a relative. Okay, no? So now first case, let's say for Mr. X is a transferor. X is a transferring what? The immobile property for Mr. X can be his stock in trade also, and can be his capital asset also. Is he transferring his immobile property for a consideration of 8 lakhs, which is less than stamp duty value? Difference is, which is more than 10% of 8 lakhs? 2 lakh is more than 80,000. Yes or no? For Mr. X, 50C will apply if the immobile property is transferred as a capital asset. Yes or no? But if he is transferring that immobile property as stock in trade, then 43CA will apply. And the stamp duty value will be deemed to be the full value of consideration to calculate his PGBP income or capital gain. Based on that, the PGBP or capital gain will be calculated. Now Mr. X cannot say that the transfer is exempt. Are you gifting the asset? Are you giving without consideration? No. If bloody you are charging consideration, no, that does not mean you have given as a gift. You are transferring. And for you, either the capital gain will be calculated or PGBP will be calculated depending on the fact that you are transferring that asset as stock in trade or capital asset. Getting my point? So tell me, now Mr. X, for Mr. X, either capital gain will be calculated or PGBP income will be calculated. And to calculate capital gain or PGBP income, here 50C will apply and here 43CA will apply. Why? Why? Because sale consideration, which is how much? 8 lakhs. Sir, sale consideration is less than stamp duty value of 10 lakhs. Yes or no? And the difference between both of them is 2 lakhs, which is more than 10% of what? Sale consideration. Yes or no? Therefore, stamp duty value, which is 10 lakhs, will be treated as income under the head capital gain or PGBP. Based on this, his capital gain will be calculated. So 10 lakh minus 4 lakh. 10 lakh minus 4 lakh. His capital gain will be 6 lakh. Yes or no? 10 lakh minus 4 lakhs. His PGBP income will be 6 lakh. Understanding? For Mr. X, the treatment is done. Now let's see who is getting the asset. Is he getting the asset for inadequate consideration? Mr. Y is getting the asset for bloody the stamp duty value is 10 lakh. He is getting for 8 lakhs. So Mr. Y is getting the asset for inadequate consideration. Value was 10 lakh. He is getting for how much? 8 lakhs. Yes or no? So tell me, how much is the difference? Now, don't you think that this difference of 2 lakh is more than 50,000 and also more than 10% of sale consideration? Hence, this entire difference of 2 lakh will be taxable as gift under section 56 to 10. Yes or no? Should be taxable, no? Should be taxable. but this will not be taxable. The gift provisions will not apply because Mr. Y is receiving that gift from, yes, got it, sir? So gift provisions did not apply. Now if the gift provision did not apply, cost will be as per 49.1. I will give you 49 slabs. Mr. Y has not received the asset by way of a gift. Mode specified under section 49.1. Mr. Y has purchased the asset. And purchase is not a mode specified under section 49.1. You cannot apply 49.1 here. You will have to take actual cost only. So this 2 lakh which is not getting taxable right now, no, don't worry, this 2 lakh will be taxable later on whenever he'll be selling that asset. Because at that time actual cost will be taken as cost of acquisition. Getting my point? So later on, what did I say? Later on. Later on 3rd of March 2026, that is in previous year, 25, 26, the above immovable property, sold for how much? 12 lakhs. So will we calculate the capital gain? Tell me, capital gains will be calculated. What will be the full value of consideration? 12 lakhs. Transfer expense minus transfer expense will be nil, no? What will be the net consideration? Net consideration will be 12 lakhs. Now what will be the cost of acquisition? 49.1. Cost to previous owner. If you will take that, then the gain which is already taxed in the hands of Mr. X will again be taxed in your hands. Bloody, we have already taxed that gain in his hands. Why are you taxing that? Why are you taking his cost? No need to take 49.1. 49.4. Amount considered, value of the asset considered under gift provision. No, gift provisions are not made applicable only. So why are you taking that value? Take your actual cost. Nobody. Take your actual cost. So here the things are very simple. Cost of acquisition will be your actual cost. And what was your actual cost? At what amount you acquired? 8 lakh. So that 2 lakh which could not be taxed earlier as your gift will now be taxable as your capital gain. But whenever you will sell that asset, at that time it will be taxable as your capital gain. Understanding? So tell me, how much? 4 lakhs. And this 4 lakh will be a short-term gain or long-term gain? Why? Because you took your period of holding from the date of buying the asset, transfer, yes or no? 19th of October 25. That time you received the asset till the date of transfer, 3rd March. Getting my point? So it will be 19th of October 2025 to 3rd March 2026, which is less than 24 months. Hence the asset is short term and will be taxable as short term gain. Now apply some common sense. See, to check whether whatever we have done is correct or not. Okay. How much you paid for the asset? 8 lakh. How much you paid for the asset? And how much you sold it for? How much is your gain? That entire 4 lakh is taxable right now at the time of selling. Nothing will be taxable in gift provision. Everything, entire gain will be taxable at the time of selling the asset, selling your capital asset. Got it, sir? Sure. Now let's twist a little bit. Same transaction, copy paste. You want me to do that? Yes or no? Sure, sir, sure. Copy and then paste. What change I will make? You tell me. For example, Mr. A was not a relative. Then for Mr. X, the treatment will not change. For X, everything remains same. From the point of view of Mr. Y, Now the gift provisions will be applicable. Now has he received the asset for inadequate consideration? Tell me yes or no. And the difference is 2 lakh. Difference is more than 50,000. Difference is more than 10%. So that entire difference 2 lakh will be taxable as his gift. Now this 2 lakh should not be again taxed as your capital gain. So don't take actual cost, bro. Don't take actual cost, because if you will take actual cost, then you are gone. Here you are supposed to take what? 49,400. So cost will be 49,400. The value of the asset already considered under gift provisions. So what was the value of the asset considered under gift provisions? Tell me. 10 lakhs, no? So reduce that 10 lakhs. So now how much will be your gain? It will be 2 lakhs. Total gain was, you bought the asset for 8 lakhs and you sold the asset for 12 lakh. What was your total gain? Out of that 4 lakh, 2 lakh is already taxed as your IFO. So how much should be taxed now? That 2 lakh is getting taxable, simple. But for that, you will not take actual cost here. You will take 49,400. Only then the balance will be taxed. If you will take actual cost, what will happen? No, that 2 lakh which is already taxed under the IFOS as your gift will be again taxed as your capital gain. Understood? You will take the period of holding same only, no? Your period of holding, because your period gain is after gift, your period gain is 2 lakh. That will be taxable. And whatever the difference which happened earlier, that difference will be taxable under the head IFOS. No problem in that. Hello? Understood? So sir, cost of acquisition is orange color, 49,400. This is 10 lakhs. The value which was already considered for which provisions? Gift provisions. Yes or no? That you have taken. Now why you have taken? Because the gift provisions are getting applicable. And here what you took? Here you took actual cost. Here you took actual cost. Why? Why? Because the gift provisions was not applicable since the gift was coming from a relative. Since the gift was coming from relative, gift provisions could not be applied. Hence, whatever price, actual cost at which you have acquired, take that amount as your cost. Yes or no? And take your period of holding only. And since the gift provisions were applied, yes or no? Then 8 lakh, no. Entire 10 lakh was taxed. So if you will not take that 2 lakh also as your cost, if you will not take 10 lakh as your cost, what will happen? That 2 lakh will be again taxed in your hands as capital gain, which is already taxed under the head IFOS. Got it? So this linking up I wanted to do. Now did you understand 49,400? Now what is the final thing? See, if at the time of receipt of the asset, by the assessee, by the recipient. Recipient is a recipient who is the assessee. Yes or no? So what I will say, if at the time of receipt of the assessee, receipt of the asset by the recipient, meaning the assessee, gift provisions under section 56 to 10 were not applied for such recipient. Yes or no? Meaning assessee. Then cost of acquisition of capital asset received by the recipient, cost of acquisition of the capital asset received by the recipient, meaning our assessee, will be what? Either it will be 49.1 or it will be actual cost. 49.1 if it was without consideration, and actual cost if it was inadequate consideration. Case of inadequate consideration, you are going to take actual cost. In case of no consideration, you will take 49.1 cost to previous owner. Yes or no? Case number 1, 49.1. Case number 3, actual cost. This is sir. This was your case number 1. Color, green color. Case number 1. Color, green color. This is case number 2. Okay. And this is color, red color. Case number 3. Okay. And this is case number 4. Okay. So I am writing about which cases here? This is case 1 and this is case 3, where the gift provisions were not applicable because the asset was coming from relative. 1 and 3. But in 2 and 4, the gift provisions were applicable. Getting my point? So in both the cases, the cost will be as per 49.4. Cost will be as per 49.4 in your hands. Yes or no? So now, what will I write here? Gift provisions under section 56 to 10 were made applicable for such recipient or assessee. Done, sir? For such recipient or assessee. Then cost of acquisition of capital asset received by the recipient means our assessee. What will be the cost of acquisition? Come on, tell me. Always 49.4. Always 49.4. Whether it was without consideration or for inadequate consideration you have acquired. Yes or no? That we have already seen in case number 2 and this we have seen in case number 4. Refer these two cases. Refer these two cases. And for the transferor, no, definitely you should be aware about the capital gain provisions. Otherwise you are gone. Now in the question, no, exam question can be exactly like this. Same question they will frame. And that same question they will ask you from the point of view of A, tax treatments. From the point of view of B, tax treatment. From the point of view of A, you will think about capital gains. From the point of view of B, you will think about IFOs. Bloody, what is happening that you have to understand. Done, sir? Understood? Connection of capital gain and gift provisions. Done. This is the end of your gift provisions. See, if I would have left it in between, no, this link would not have been there. So that is why I gave a little bit break a little bit early today. Okay, now pay attention. Did you understand the gift provisions? Okay, all the incomes we have covered. All the incomes we have covered. Now see the list. Can you see the list? This one. Which incomes? Did we cover dividend income? Did we cover dividend income? Winnings income? Amount deducted from employee salary, interest on securities, rent of plant, machinery, furniture, yes or no? Composite rent, then amount received under key man insurance policy, then interest on compensation, advance received and forfeited, gift just now we completed, and along with that I have completed 49.4 also. Done, sir? With examples, okay? Next one. Compensation or other payment received or receivable on termination or modification of what? Even this will be treated as your IFRS income. But sir, usually whenever we get compensation, see, I am an employee. I am an employee. So my employment contract is terminated, or the terms of my employment contract are modified. So on modification or termination of my employment contract, whatever compensation will come will be my profit in lieu of salary, taxable under the head salary. But they are saying no, it will be taxable under the head other sources. If it cannot be taxed under the head salary, it will be taxed under the head IFOS. So when it will not be taxable under the head salary? It will not be taxable under the head salary if this amount is not coming from your employer. Contract terminated, contract modified. So will your employer give you compensation? Yes. If he gives, then it will be taxable as your salary, profit in lieu of salary. Then don't come here. But sometimes no, employer-employee make some arrangements. That see employer, you have terminated my contract, you have modified my contract, because of that very much loss is going to happen. For that you are going to give me what? Compensation. And since you are giving me that compensation is getting taxable in my hands as my profit in lieu of salary. Don't give me, but you tell someone else to give it to me. Understanding? Tell someone else to give it to me. For example, I was supposed to receive a compensation of rupees 10 lakhs. If my employer would have directly given me that compensation, that would have been taxable for me under the head salary as my profit in lieu of salary. Now what happened? No, I told my employer to do some arrangements, and out of a little bit favor to me, what he said, okay, no problem, I will not pay, because if I will pay, it will become your profit in lieu of salary. See, there is one debtor of mine. So there is one debtor of your employer. From that debtor, your employer is supposed to receive how much? 10 lakhs. And that same 10 lakh he is supposed to pay you. So what your employer said, to the debtor, pay that 10 lakh to my employee. Now did you receive an amount? That amount is received on termination or modification. And did you receive that amount from your employer or employer's debtor? Will it be taxable under salary? Because it is not from employer-employee relationship. So it will be taxable under IFOS. Because you are trying to fool us by taking this amount from someone else so that this amount should not be taxed under the head salary. And actually we cannot charge under the head salary because the amount is not coming from your employer. That debtor of your employer is not your employer, no. But this amount should actually be taxed in your hands. But which we could not tax under the head salary. So we have to tax it under the head IFOS. So any amount received on termination or modification of your employment contract, if not taxable under the head salary, will come under the head IFOS. Even that income will be taxable here. All the incomes covered by specific charge are over. And along with those incomes, I have tried to cover few incomes which are taxable, which are similar type of incomes, but which are taxable under the head IFOS only because of general charge. Yes or no? Now, few other incomes are also there. Few other incomes are also there. See, which will be taxable under the head IFOS. Other incomes taxable under the head IFOS. As per which section? 56(1). So which are those incomes? If you get royalty income, can you get royalty income? Are you a professional author, professional writer? If yes, then it will be taxable under the head PGBP. If you are Chetan Bhagat, have you heard about Chetan Bhagat? He is a professional author, professional writer, very well known author. He writes books. If you are a Chetan Bhagat writing books and earning royalty income, it will be your PGBP income. But unfortunately, you are not Chetan Bhagat. You are a CA student. And you have written a book, Life of a CA Student. How many problems you face? You have to travel, no food, professors are sometimes boring, we get sleepy. So heartfelt, you poured your heart in that book. Whoever is reading that book starts crying. Such an emotional book you have written. And some publisher got impressed with your content. And that publisher printed that book and that publisher is giving you what? Right. Are you a professional author? But still you are receiving royalty, no? Is it an exempt income? No, it is a taxable income. Can you charge it under any of the earlier four heads? No, tax it under the head IFRS. Any remuneration you are getting from non-employer. For example, you are a lecturer in the college. So who is your employer? College. But if you are setting the paper, checking the paper for university, so university will give you paper checking fees, paper setting fees. Is it your remuneration? Yes. Given by university, who is not your employer. So it is a remuneration from non-employer, taxable under the head IFOS. Because if it was coming from employer, it would have been taxed under the head salary. But since that remuneration is not coming from your employer, it cannot be taxed under the head house property, it cannot be taxed under the head PGBP, it cannot be taxed under the head capital gain. So as per 56(1), it will be taxable under the head IFRS. For example, I am a CA and I am working in some company like Reliance. Since so many years, I have been working in Reliance as the employee of Reliance. Yes or no? And right now, I am the CEO in that company. So many years of experience in the field of finance, taxation and all. And I have led that company since so many years. Right now, I am the CEO in that company. Now some big college, MBA college, is calling me for a guest lecture. That, sir, please share your knowledge of finance and your business knowledge with the students of our college studying in MBA. Will I go free of cost over there? Maybe I will take out my time and will deliver a guest lecture, seminar to them. I will charge something for my time, honorarium. So I'll go there for 2 hours. I'll charge 50,000. I'll charge 1 lakh rupees. My time is important. I'm a CEO of Reliance. And if in your college, if you're calling me for a guest lecture, that is not my honor. It is your honor to have me. And if I'm giving you time, you should be paying me something for my time. Usually they get what? Heavy amounts to be guest speakers, guest of honor, yes or no? And if they will go in such big events, seminars, etc., that college is going to give me what? Honorarium for delivering that seminar, to delivering that guest of honor speech, yes or no? So that from my profound knowledge, my knowledge of taxation, finance field, their students can learn something. And that will also help them to grow their name also. That see, CEO of Reliance has come to deliver a guest lecture in our college. So my name, my fame, my knowledge, my time I am giving, you should be paying me something. Otherwise I am not going to come here to spend my time. Getting my point? So they are going to pay me for my time, my fame, my name, yes or no? That is known as what? Honorarium. And that honorarium which I am getting from that college, is that college my employer? So that is a remuneration coming from a non-employer, taxable under the head IFOS, because that is not an exempt income and cannot be taxed under any of the earlier 4 heads. So because of general charge will be taxable here. Can I get insurance commission? Yes. So if I am a full-time insurance agent, my business is to, my full-time work is to sell the insurance policies and earn commission, then that commission will be my PGBP income. Because my profession, my vocation is to sell insurance policies and earn insurance commission. But what if in my spare time, if I meet a few people and sell the insurance policy, will I still get the insurance commission? Yes. But that is not received on a full-time basis being a commission agent. Yes or no? That is on a part-time basis. In my spare time I am doing that work. That work is not my bread and butter. My bread and butter is to teach. This is my profession. But if some time is still remaining with me, I am utilizing that time, and in the spare time I am selling the insurance policies. So will I get insurance commission from the insurance companies? Yes. That will be my IFOS income. Since I am not a full-time commission agent selling the insurance policies for insurance companies. Yes or no? It cannot be my PGBP income. Then it will be my IFOS income. Getting my point? Hello. Insurance commission is an exempt income. Taxable income. Nowhere exemption is given. and it cannot be taxed under any of the earlier 4 heads. So it will come under the head IFRS. Next one, board meeting fees, I've already told you, under the head salary. Then family pension, this is important. This is very important. See, now with family pension, now I'll be discussing about other pensions also. Now an employee is there, that employee dies. If that employee gets pension from the company, then employer, then it will be salary. It can be commuted pension, it can be uncommuted pension, yes or no? So if the employer is giving pension to the employee, then in the hands of that employee, it is a salary income. Commuted pension, uncommuted pension, taxability we have already seen under the head salary. But what if that employee dies and after his death, the family members of the employee keeps on getting that pension? That is known as family pension. That is known as coming from your employer or the deceased person's employer. You are just a family member receiving that pension from his employer after his death. So this pension is not your salary because there is no employer-employee relationship. So that pension will be family pension, will be taxable under the head IFRS. But don't worry, out of that you will get standard deduction. This is the second income from which you are going to get standard deduction. First income was interest on compensation, enhanced compensation, taxable under the head IFRS. From that you used to get 50% standard deduction. You forget everything very soon, huh? You remember this? Now what? Now I have told. Now you will remember. Before even asking, you should be giving me the answer. Sir, one more place we saw standard deduction. This is the second place. So any family pension received by the family members of the deceased employee will be taxable for those family members under the head IFRS. But from that family pension you are going to get, that family member is going to get what? Standard deduction. How much? 1/3 of that family pension or maximum 15,000, whichever is lower. So how much family pension received? 60,000 full year. So 1/3 of that 20,000 or 15,000, whichever is lower. So how much will be the standard deduction? 15,000. Out of 60, take 15,000 standard deduction. Balance amount 45,000 will be taxable. But if you follow 115 BSc, you are under default tax regime. Then the standard deduction will be available to the extent of maximum 25,000 and not 15,000. Very important point. So from family pension, how much maximum standard deduction you get? 1/3 of the family pension received or 15,000, whichever is lower. But if you follow 115 BSc, you are in the default tax regime, then also you will get standard deduction. But the amount, maximum amount of standard deduction will not be 15, it will be 25,000. Understanding or not? See, if employee gets from the employer, then salary. Forget about it. But after the death of the employee, the family members will get from the employer, then it will be family pension, will be under the head IFRS. Yes or no? But every time the pension will not be a family pension, will be taxable like this. Sometimes the pension is received by the recipient of gallantry awards. Have you heard about gallantry awards? These are the awards usually given by the government to those people who show extreme courage in grave situations. Like our soldiers are there. They are fighting on the battlefield. One soldier, destroyed 3 tanks of the enemies. Took 5 bullets on the chest and still he killed 8 enemies. He has shown extreme courage on the battlefield. So this courageous situation is honored by the government by giving gallantry awards. So sometimes the gallantry awards can be given while you are alive, while showing that courageous situation. Yes or no? But sometimes it can be given posthumously also, after the death. So a recipient of gallantry awards like Paramveer Chakra is there, Mahavir Chakra is there, Ashok Chakra is there, yes or no? Veer Chakra is there. These are few examples of gallantry awards. So a person, a recipient of gallantry award, meaning awardee, if the government gives pension to that person, fully accept. But if that person dies, then after his death, the pension is given to his family members, then family pension is also exempt. 10 subsection 18. Don't charge this pension under the head IFOS or any other head, because this pension is fully exempt. Pension from employer, salary head. After the death of the employee received by the family member, family pension taxable under the head IFOS after strangle deduction. Yes or no? But if this pension is received, it will not be taxable anywhere, neither under the head IFOS nor under any other head, because this pension is received by the awardee of gallantry awards. If he receives, then also fully exempt, 10 subsection 18. And if after his death, his family members are also receiving as family pension, then also fully exempt under section 1018. Yes or no? Now, there are some cases when the members of our armed forces, meaning our soldiers, in the operational course of their duties, what did I say? Operational course of their duties, if any member of the armed forces has lost their lives. You know, na? Sometimes it happens that while serving for the country, the soldiers, they sacrifice their life. So they sacrificed their life in the operational course of their duties. Do you know Uri attack happened? Surgical strike we did. That was in response to the attack happened on our CRPF team. So that CRPF team, in few trucks, in few vehicles, they were moving from one place to another. I guess it happened in Pahalgam. Sorry, not Pahalgam, some other place. I don't exactly remember the name, but somewhere near 80 to 88 CRPF Jawans. They were going from one location to another location. They were on their duty. And a car filled with RDX, the explosive, rammed into that trucks, and our 80 to 90 Jawans got, they had to sacrifice their life over there. They did not even got the chance to fight at that time. But they were on their duty. So while they are on operational duties, if they sacrifice their life, whether they receive gallantry award or not, but they have sacrificed their life while they are on their duties, fighting with the terrorists, fighting with the enemies. Yes or no? You might have heard about the Major Sandeep Unnikrishnan. He lost his life fighting with those terrorists in Taj Hotel, 9/11. Sorry, 26/11. Yes or no? So he lost his life at that time. So he was on his duty. So at the time of performing his duties, if a soldier is sacrificing his life, so after his death, his dependents, meaning his family members, get family pension. Even that is also fully exempt. 10 subsection 19. 10 subsection. If you see any of these pensions, these are not taxable. These are fully exempt. Will you remember? But you get pension from in some other cases also. What if there are some pension policies, insurance company, pension policy, any mutual fund, UTI, they also issue some pension plans. So you invest in the pension plans so that you start getting pension. So can you receive pension? Yes, you receive pension from these investments also. So the investments which you make in the pension plans, pension fund, pension policies of insurance companies or mutual funds or UTI, on those investments also you get return in the form of pension, in the form of annuity. That is return on your investment, not exempt anywhere. That is a taxable income, cannot be taxed under any of the other heads, will be taxable under the head IFOS. Return on investment. So you are investing in some policies, insurance policies. You are investing in some plans of mutual funds, UTI, yes or no? You are investing there so that after certain number of years you start getting pension. on this investment which you are doing. From this investment, you start getting pension. So that pension which you are receiving is not received from your employer. It's not a pension which you are receiving as a family pension. Yes or no? This pension is nothing but return on your investments made in these plans or policies. So that return on investment is always your IFRS income, taxable under the head IFRS. Now central government has also a scheme, National Pension Scheme. You might have heard about NPS. So in the NPS also, if you contribute, after certain number of years, you start getting pension from NPS also, from the central government. Even that will be your return on investment. Nowhere exemption is given. Even that will be taxable under the head IFOS. So all the discussion of pension is done right now here only at one place. Pension from employer. Tell me. Salary head. You are employee receiving pension from which head? After your death, your family members will receive. Standard deduction. 1/3 or 15,000, whichever is. But if the family member is following 115 BSc, then 1/3 or 25,000, whichever is lower. If the pension is received by the awardee of gallantry awards, fully exempt. After his death, his family members, fully exempt. If the member of armed forces has sacrificed the life in the operational course of duties, and after his death, the family members receive. Dependents receive. This will be fully exempt. 1018, 1019. Yes or no? Investments made in certain plans, policies, yes or no, of insurance companies, mutual funds, UTIs, and those plans are annuity plans, pension plans, annuity policies, pension policies. On those investments, now you will start getting what? Pension. That will be taxable as your IFOS income. Now you are getting pension from National Pension Scheme, Atal Pension Yojana. These are the pension schemes of the government. So now you are investing in the government pension scheme. From that you are getting what? Return on investment. That is your IFOS income, taxable. Will you remember? Can you receive pension from insurance company? Can you receive pension from insurance company? If you receive that pension on a regular basis in the form of monthly amount, then it will be taxable under the head IFOS. But if you commute that pension coming from LIC, commute that pension coming from LIC or any other insurance company. So you invested in a pension plan. You invested in a pension plan of LIC or any insurance company. Yes or no? So from that pension plan, you are supposed to receive monthly pension. So if you keep on getting the monthly pension, then it will be taxable. But what if you commute that pension and receive a lump sum? Then that lump sum pension coming from insurance company on commuting your monthly pension will also be exempt under section 1010A. Do you remember? Commuting the pension coming from employer was exempt there. So this same pension will be exempt under section 1010A if you commute your pension coming from insurance companies. Even that will be exempt under section 1010A. Will you remember this? So sir, family pension. We have seen the family pension. Okay. Now, if the central government is giving pension to individual awardee, it will be exempt. This will be exempt. This will be exempt. Yes or no? And now see, if you are getting pension from UTI, mutual fund, insurance company on their annuity or pension plans or policy, that will be taxable as your IFOS. If you are receiving pension from National Pension Scheme, Atal Pension Yojana, then also it will be taxable. But if you are receiving pension from insurance company, if you are receiving that monthly pension, then it will be taxable. But if from that insurance company, whatever monthly pension was supposed to be received from LIC or insurance company, that you are getting commuted. So the commuted pension received by individual from any approved pension fund of LIC or other approved insurance company, then it will be fully exempt under section 1010A, because you are not receiving that amount as a regular income. You are getting it commuted and you are receiving it in the form of lump sum. Then it will be fully exempt under 1010A. Will you remember? Sure. All the pensions at one place. You have to remember each and everything which I am discussing right now. You cannot take these things lightly. In the examination, they ask you these points. And you do the blunders in these points and then your answers are coming wrong in the exams. So don't take this chapter lightly, I'm telling you. Very, very, very important chapter. And everything I have told you and discussed in extreme details. And if you will forget all these things, it is not going to help you in the exam, because this chapter can be clubbed with any chapter in the exam and an independent question can be asked. But in that question, don't forget that they can slip any provision from this IFOS chapter in that question. This is that much important. Getting my point? Next one. See, agricultural income I have already discussed with you. Agriculture income from a land situated in India. Fully exempt. Which are those agriculture income? Yes or no? Which are those agriculture income? When it will be exempt? I have already told you. But some agriculture income you are receiving from a land situated outside India. Will that be exempt income? No, that will be taxable income under the head IFOS. Depending on your residential status, it will be taxable. If your residential status is ROR, so whether that income is received in India or received outside India will not make any difference. It will be always taxable. But what if that agriculture income from a land situated outside India is received outside India? Then it will not be taxable in the hands of RNOR or NR. It will be taxable in their hands only if it is received in India. Do you remember all these things? So that time you will have to take care. Keep in mind the residential status also, but that agriculture income will be taxable in India, even if the land is situated outside India. But if the land is situated in India and from that agriculture income is coming, that is fully exempt. Now, do you know companies are there? Companies will issue shares to the shareholder. So if you invest in company, for your investment, the company will make you shareholder and the company will issue shares. But if you invest your money in UTI or you invest your money in the mutual fund, so for your investment made in their capital, you will get units. So you will become a unit holder and they will issue units. So on shares, what you get? Dividend. So on units also you are going to get dividend. The same treatment has to be given for dividend on units which you give for dividend on shares. Do you remember dividend on shares? All the entire amount taxable without any deduction for any expense. But one expense is allowed. Interest on loan will be allowed from here also to the extent of maximum 20%. Dividend is taxable at what rate? Normal rate. This will also be taxable at normal rates. Yes or no? Next one. Then income received by MP, MLA, MLC. If they receive salary, that will be taxable under the head IFOS, because it is not received due to employer-employee relationship. They get salary from government, and government and MP, MLA, MLC are not employer-employee. So that salary is not coming because of employer-employee relationship, and that salary is not exempt anywhere. That salary is taxable. But since it cannot be taxed under any of the earlier four heads, it will be taxable under the head IFOS. And if that MP, MLA, MLC is also receiving, along with salary, they receive daily allowance or constituency allowance. So their daily or constituency allowance is fully exempt under section 10 subsection 17. Under section 10 subsection 17. Daily or constituency allowance. But if they follow 115 BSc, if they follow default tax regime, then the exemption available under section 1017 will not be available. If they follow 115 BSc, then their salary will also be taxable and their daily or constituency allowance will also be taxable if they follow 115 BSc. But if they want to claim this exemption, they will have to shift out. Understanding? Hello, sir. Now, sometimes the awards are given. You are an employee. And your employer is giving you awards. Profit in lieu of salary. Taxable under the head salary. If you are a professional sportsman or an athlete, so in the course of exercising your profession, you might receive what? Awards. That will be taxable as your PGBP income. But if you receive awards in any other case, then it is as good as your gift. Something received without consideration will be taxable as your gift under the head IFOS. But sometimes you receive awards and rewards from the government in public interest, like Padma Shri, Padma Bhushan, Major Dhyan Chand Khel Ratna Puraskar, Dada Sahab Phalke Puraskar. There are many awards which the government will give. in the public interest. With those awards, you get some money, award money. So that award money is not treated as your income, that is fully exempt under section 1017A. So if you receive awards and rewards from the government in the public interest, then it will be exempt. But if those awards are received by employee from employer, taxable under the head salary, from professional sportsman or athlete, taxable under the head PGBP, because it is received in the course of exercising their profession. Yes or no? If that is received in any other case, then it will be taxable as your gift under the head IFOS. But these awards and rewards will not be taxable because they are exempt under section 10 subsection 17A. Will you remember? Hello sir. Hello sir. Now this note number 1 I have already taught you, and note number 2 also I have already taught you in the beginning of the chapter itself. Winnings income and income from an activity of owning and maintaining racehorse. I am not going to tell you again and again. Okay. Now section 57 is there. YKT. You know this. All the deductions which are available from your business income while calculating your PGBP income. The similar type of deductions you can take while calculating your IFRS income. But remember, the deduction cannot be claimed from dividend income. Dividend from shares, dividend from units. No expense will be allowed as a deduction. Only 20%, to the extent of 20% of such income, interest can be claimed. Yes or no? Second, winnings income. No expense will be allowed as a deduction. These incomes are taxable under the head IFOS, but still from these incomes, the deductions will not be allowed. But all the other taxable incomes, sir, family pension is there. From there also expense cannot be claimed as a deduction because standard deduction is allowed. Sir, interest on compensation or enhanced compensation, from there also the expense cannot be claimed because from there also standard deduction is allowed. So 4 incomes you have to keep in mind. 4 incomes are taxable incomes. But from those incomes, deductions are not allowed. Number 1, dividend. Dividend on shares. Number 2, dividend on units. No expense will be allowed as a deduction. Yes or no? Number 2, winnings. From dividend you can take one deduction, that is interest on loan, to the extent of maximum 20%. Other than that, no other expense will be allowed. Yes or no? Winnings, no expense will be allowed. Yes or no? 2 incomes. Third income, family pension. Fourth income, interest on compensation or enhanced compensation, because from these 2 incomes standard deduction is given. Other taxable incomes, any other taxable incomes under the head IFRS, all deductions are allowed. Deduction for all expenses, provided the expenses should not be capital in nature. Expenses are revenue expenses, and those expenses are incurred wholly and exclusively to earn that IFRS income. So if the expenditure is revenue expenditure, not a capital expenditure, and if that expense is incurred wholly and exclusively to earn your IFRS income, then that entire expenditure will be allowed as a deduction. No need to see whether that expenditure is resulting into income or not. Income might arise, income might not arise. But the expenditure was incurred to earn the income, that expenditure will be allowed as a deduction. Yes or no? What if the expenditure incurred is more, but the resulting income is less? No problem. Whatever income is there, from that income, entire amount of expenditure will be allowed as a deduction. All those expenditure which you usually claim while calculating your PGBP income, all such type of expenses are allowed as a deduction. Will you remember this? Exempt incomes are taxable here or not taxable here? So expenses of exempt income will also be ignored. Understanding? Exempt incomes are ignored, so ignore the expenses of exempt incomes. So only the taxable incomes are considered. Take the taxable incomes and take the deduction from those taxable incomes, except those 4 incomes. Will you remember this? Everyone. Now the disallowances are also applicable. Disallowances are also applicable. Which type of disallowances? The similar type of disallowances which are attracted while calculating your PGBP income will be attracted while calculating your IFRS income. Payment more than 10,000 in a day, other than prescribed mode, disallowed there, disallowed here also. Payment to related party, and that payment is more than reasonable amount, that excess payment will be disallowed there also, here also. payment on which you are supposed to deduct TDS, but you did not deduct TDS. 100% of the payment disallowed, 30% of the payment disallowed if the payment was made to resident. There also it is disallowed. Here also it is disallowed. All the disallowances which are applicable while calculating your income under the head PGBP, similar type of disallowances will be attracted here also under section 58. Will you remember? And 59, deemed incomes under the head IFOS. If any expense, any loss, any liability was claimed as a deduction under the provisions of Income Tax Act other than PGBP. Because against that, if recovery is done, that is already treated as your deemed PGBP income. No. So I'm talking about all other provisions other than PGBP. All other provisions other than. So if your expense was allowed under other provisions other than PGBP. If your loss, your liability was allowed under other provisions other than PGBP. Against that expense, against that loss, against that liability, later on if some recovery is made, then that recovery will be treated as your deemed income under the head PGBP. Later on any benefit is received, then that benefit will be taxable as your income, deemed income under the head IFOS. Not PGBP, under the head IFOS. Will you remember this? That was your section number 59. And with this, the chapter comes to an end. Will you remember this? Read all the things today itself, and tomorrow few questions are there in ICI study mat, very easy question, we are going to solve them, and tomorrow in the first half only, in the first session only, we'll complete those questions very soon, and we'll start with new chapter. New chapter will be set off and carry forward, and set off and carry forward will finish, and we'll immediately start with clubbing tomorrow itself. See you all tomorrow. Bye bye.